Good morning, and thanks for having me on. My takeaway is that finally, all of these Fed rate hikes are making an impact on inflation, bringing it down to that. What I used to think was the elusive 2% target is finally starting to happen, back down to a two-year low for the headline. PPI we saw this morning, I was just glancing at some of the details, but looks pretty good. Only up a tenth for both the headline and the core, and down to I think it was like three-year lows or something for the on a year-over-year basis. So again, all those Fed rate hikes are starting to kick in, and we're finally starting to see the fruits of their labor.
We're finally starting to see it, but we are still not at that 2% number. What do you think might be the catalyst to finally get us down to the Fed's desired inflation rate?
I think you will have to take, well, first of all, just in terms of our Fed rate outlook, I mean, we're still looking for that Fed rate hike next, or in 2 weeks, I guess, on July 26th. Even though we're seeing this, promising inflation data, the fact that wages are still running pretty hot. Job demand is still pretty strong. Housing has already found a footing. Business investment is decent. Consumer spending took a little bit of breather last month, but the month before that, they're running hot as well. All that sort of sets the stage, I think, for another rate hike in July. And this slower inflation data, I think, gives them the door to, or gives them the leeway to sort of talk about moderating the pace of rate hikes, needing more time to assess that economic landscape that they've been talking about lately. And this will do it. And of course, but keeping rates at these restrictive levels will help bring down that level back down to our inflation back down to 2% eventually. But, definitely not a rate cut story just yet.
All right, so that's kind of where I think the market's probably trying to go. I think the market's probably discounting, a July rate hike and then, a pause again. The question then becomes, how long is that pause? And is that a 2024 event that we might stay at these levels of rates?
So our first official forecast is just one more rate hike, and that will be it.
Yep.
Again, base case, but then staying at these levels. And so I don't think rate cuts are going to be a story until probably mid 2024. We used to talk about, early 2024 for rate cuts, but now we're thinking a little bit later. And that's because we're also shifting our call for that elusive slowdown again. So now we're looking for more softer growth in around Q4, Q1 now, so around that turn of the year, as opposed to Q3 and Q4. So you just can't argue with the data. It's been very resilient overall. It's, again, difficult to argue with it. So we're pushing out that slowdown a little bit by quarter.
Yeah, and another thing that you note is that the greenback is struggling a little bit following some of this economic softness, hitting a 14-month low, I believe. To what extent is dollar weakness part of your calculation for what our economy is going to look like in the second half of the year?
The U.S. dollar had been running super strong up until yesterday, and so we're finally going to see that dollar weakness start kicking in, and we're seeing it, and it's also helping because a lot of the other central banks are not yet ready to hit the pause button just yet. Aside from the Bank of Canada, I think that's probably it for the Bank of Canada for the rest of this year. RBA looks like they're almost done, but you've got the ECB and the Bank of England are still going whole hog on that rate tightening front. So that's also going to boost so that's also helping their currencies at the same time with the flip side of the weaker greenback.
So can we take the recession talk off the table right now?
Official recession?
Yeah.
It's possible. I mean, we've always been in that soft landing, mild recession, moderate recession camp, but we were never in that hard landing camp. And now, I mean, it is quite possible that we will see, and some people always say, what the heck does that mean? But, no landing. I at the very beginning, I used to say hard landing, soft landing, no landing. And it's possible that we could start seeing things glide. And, like nothing is impossible, but this is kind of looking more possible. But at the same time, the longer they leave rates up in that restrictive territory, in order to get CPI back down to 2%, we'll probably need to have that breaking in the economy.
Well, there's the recession for all of us, and then there's the markets, right? And they don't always agree. Do you envision us seeing a little bit more of a risk-on trade in the second half of the year after the Fed does potentially start to tone down and soften the rate hike cycle that we're seeing?
We could see, that's a good question. So we could see risk on because of the fact that the Fed is going to start talking about leaving rates as is more firmly, as opposed to talking about needing more time. But at the same time, why are they talking about needing more or staying on hold? It's because the economy is finally starting to slow. And again, this is when you're going to start to see softer data, more starting to talk about that recession again, or at least that soft landing coming into play in the fourth quarter or so. So it's going to be a little bit of a mix. I don't know which one is going to outweigh the other, because again, yes, it's good news for the markets that the Fed's not going to keep tightening, but at least at the same time, it's bad news because that means that the economy is slowing and it's not needed anymore.
So I guess one of the issues for a lot of investors is just kind of, we think beyond 24, beyond 23 into 24, 25, what kind of economic growth do you think is reasonable for an economy that has dealt with this much inflation?
So we're probably going to see at least some below average, at least for a little while. So we, for this year, we have about 1.7% growth, and that was a little bit higher than we had originally because of this delayed slowdown. But for next year, we've got I think it's a 0.5% growth, which is obviously very sluggish. And then for the year after, we're going to start seeing some improvement as the rate cuts start kicking in. But again, I think we're probably going to see some sub-average growth, at least over the next few years.
And where do you think that sub-average growth is going to be the most prevalent in the coming years?
In terms of where by country or
sector, in terms of demo and geographic.
So I think the U.S. will probably be, just again because America's it's still going to be the strongest with all the different positive fundamental factors behind it. I think the U.S. will still emerge probably stronger than emerge at a faster pace, I guess, from this slowdown than everyone else. The areas where I'm going to be a little bit more worried will be Europe and the UK, only because they've already had the other issues that are not related to pandemic, like Brexit, for example. At the same time, you also have higher inflation and higher interest rates staying longer, higher for longer there. And they're still going whole hog on that tightening front. I think the ECB minutes today were alluding to the fact that there are more governing council members from the ECB are thinking about September. I think it's a bit early, but that's something that it's becoming more of a reality, possibly in the next little while.
Jennifer, we also got another initial jobless claims number today, came in better than expected, and showing a decline from last week. Again, just another data point on what is kind of a very solid labor market. What do you make of this labor market? Does this surprise you at all, the strength?
Broadly, no. And then, it's still strong, but at the same time, it is starting to soften. That 209,000 increase that we saw in payrolls was still below expected. But like I said before, during any other given year, it's still a very solid number. But I think there are still some other issues that are coming in play, like, again, demographics, people changing retirement patterns, people retiring earlier, people having fewer kids, so and then of course the aging of the global population, all of that feeds into tighter labor markets. So this is an issue I think that's going to be playing on for some time. It's not going to be like what we saw earlier, like half a year ago, but at the same time, it's not going to be as loose, I guess, as one would expect. It was interesting. I was looking at the NFIB survey earlier this week, and I was looking at over the past decades, like how they were talking about the single biggest problem that you're reporting. So over the last decade, I think the inflation, of course, it was up and down, but overall it was still pretty modest, being the inflation being the number one problem. But labor market, labor quality was still around.
Yeah, Jeff, we're going to have to wrap it up right there just because of time. We appreciate getting your thoughts. Jennifer Lee, Senior Economist at BMO Capital Markets. This is Bloomberg. Let's get some company news right now with Steve Rappaport.
All automakers and union officials are in Detroit for contract negotiations that started on a less than friendly note. Bloomberg's Gina Cervetti has more.
Steve, the gathering began with a symbolic snub when UAW President Shawn Fain broke decades of tradition by refusing to shake hands with reps from each of the big three car companies. Fain is looking to protect jobs as Ford, GM, and Stellantis increase transitioning to electric vehicles. EVs require fewer parts than cars and trucks with combustion engines. The UAW wants to win back the cost of living increases that workers lost when the Great Recession bankrupted GM and Chrysler.
Thanks, Gina. The former Twitter employee responsible for compensation and benefits is suing Elon Musk and Twitter successor X Corp. Bloomberg's Charlie Pellet reports.
Plaintiff Courtney McMillian says thousands of workers were wrongly denied full severance in the aftermath of Musk's takeover of the company. In a complaint filed in the U.S. District Court for the Northern District of California, McMillian said about 6,000 Twitter employees laid off since November 2022 have not received the benefits they were entitled to under the company's severance plan. Before she was terminated, McMillian worked at Twitter as the head of People Experience.
Thanks, Charlie. And shares of PepsiCo are up after the company adjusted estimates once again following a strong quarter, suggesting consumers are still willing to pay higher prices for beverages and snacks. Organic revenue will probably go 10% this year based on analyst estimates. I'm Steve Rappaport, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 10:21 on Wall Street. We check the markets for you all day long here at Bloomberg, and stocks, they are trading higher. Investors reacting to that weaker than expected inflation report on producer prices we got earlier today. On the one hand, we do have signs of strength in the job market because weekly jobless claims, they came in weaker than expected. And the Dow right now, it is up 87 points. That's up about 0.7%. The S&P 500 up 22, about 0.2%. The Nasdaq, it is up 120 points, so it's the big winner of the day in percentage terms, up almost 0.9%. The yield on the 10-year Treasury right now, it is 3.8%. Spot gold, it is trading higher. It's been up about fractionally up about $1.21 right now. NYMEX crude, it is trading higher. It was lower earlier. Right now it's $76.55 a barrel. There is some bearish sentiment on oil. Global oil demand isn't expected to grow as fast this year as previously thought, and that is due to the faltering economies of developed countries, particularly Europe. And this is according to the International Energy Agency. IEA head of Oil Markets Division, Toriel Bassoni.
We're seeing weakness, especially in Europe, and as the manufacturing remains weak, we're also seeing some negative sentiments in China.
And Bassoni there on the pulse with Francine Lacroix. And you know how many people are still working remotely at this point, and how this is really killing landlords who rent out all that office space? Well, now McKinsey Global Institute says with office attendance at about 30% below pre-pandemic levels, remote work could wipe $800 billion from the value of office buildings in major cities. That's a 26% plunge, guys, from the before times of 2019. And Paul and Madison, McKinsey is warning this could deepen to as much as 42%. Could be a good time, though, to rent office space here in the city if you have a business and you always wished you could afford it. Asking rents in New York City for commercial offices, that's down about 18%. And that, Maddie and Paul, is a Bloomberg Business Flash.
All right, Denise, thank you so much. We appreciate that. As always, Madison Mills, Paul Sweeney here in our Bloomberg Interactive Broker Studio. Tech Talk today, a good one. We have folks at Huawei Technologies, Steve Geisler, U.S. Chief Intellectual Property Counsel, and Andy Purdy, Huawei USA Chief Security Officer. They joined us for a roundtable on Huawei's 2023 Innovation and IP Forum at its Chinese headquarters today. Steve, before we get to kind of what you guys are doing at your forum today in Shenzhen, China, talk to us, Steve, what it's like at your company dealing with sanctions from the West, particularly the U.S. How has that impacted your business?
So my business, I'm a lawyer within the Huawei corporate family. So for me personally, it means more work. It does, however, mean as an American, I have to always be mindful of the export control and the sanctions laws because I work in intellectual property. That does, of course, put some constraints on me. But by and large, my day-to-day job deals with patents, which are publicly known. Of course, the word patent means open. So I deal with technologies once they've already become public, and I deal a lot with licensing with other companies. And so my day-to-day job is not impacted nearly as much as if I were, say, an engineer working within the Huawei corporate family.
Okay, well, because you're a lawyer, I know that you are not going to answer this question, Stephen, but just to throw it to you, what does Huawei's return to the 5G phone market look like, and what does the smartphone business continue to look like for Huawei given these sanctions?
I will definitely give you the lawyerly answer, but the correct answer. My job really is not to predict it, it's just to prepare. So if Huawei were to return to the 5G phone market, I need to make sure that we have the licenses in place, such as the 5G standard essential patent licenses with our licensing partners to make sure that we would allow for that. Huawei previously did have 5G phones, so we have most of those patent license agreements already in place. So my role in terms of preparation for such a contingency is already underway. But in terms of predicting and in the sales visibility of our product mix, people like Andy certainly can address that. But for me, I prepare. I don't predict. All
right, so
the nature of my job.
So Andy, let's bring you in here. Andy Purdy, Chief Security Officer for Huawei Technologies in the U.S. Talk to us about what you guys are doing with this Innovation and IP Forum in Shenzhen today. What are some of the big products and services you guys are talking about here?
Yeah, this is a part of our bigger effort that you touched on with Steve a moment ago. Given the situation that we face in the United States and around the world, we've been trying to, and we've been successful at adjusting our business strategy and changing our portfolios with a huge historic investment in R&D, over 25% of our global revenues, so that we can customize our products for our carriers, our enterprises, and our consumers. But the three key things of technology that we are embracing that are part of this program today are digitalization, intelligence, and carbon neutrality. So our focus as a company has been on connectivity, computing devices, intelligent auto solutions, and digitalization of power. And you can see that in the example of, we talk about AI, the Pangu AI 3.0 that we're going to be talking about in this conference, which is heavily focused on weather. And the Nature magazine has just issued a major article about weather prediction. It's very exciting about how AI is going to make every industry more productive and efficient, and it's going to reshape all industries with AI. So our focus is really on industry AI.
So Andy, just from the technology standpoint, the commercial standpoint, what are your leaders in China telling you about, kind of their strategy for dealing with the West, whether as customers, as a supply chain? what scenario are you operating under? Like, how do you create a 3 to 5 year business plan?
Well, as I said, we're leveraging the convergence of technologies, 5G, cloud, sensor technology, AI, catalyzing the digitalization of industries that we've been working on, and actually moving toward 5.5G, which is some of the other things we're going to be talking about today. So we're heavily investing in what we can do in terms of develop technologies to help the telecom carriers raise their capabilities to supply 5G and hopefully 5.5G, and to help the customers of the industry sectors around the world, such as you can see the benefits of the Pangu 3.0.
So given that, I'm curious if this kind of overall push into IP licensing, does that mean that your focus is more on back-end technology versus more consumer-facing products?
Steve, you may want to touch on this also, but no, it's the smartphone issue has been what was dramatically affected the inability of American companies to sell the non-sensitive 5G chips for our phones. So everything else we've been emphasizing with the digitalization, and we've been able to grow our enterprise business by 30% in 2022, using the themes of digitalization and digital transformation. We've leveled off the drop in our consumer business, and we expect our carrier business to meet expectations.
Steve, do you have any thoughts there as to kind of how you guys are navigating some of from a patent perspective?
Yeah, so as Andy said, the IP actually is somewhat detached. Now, it's not completely detached. We typically are going to be patenting the same technologies that would be in our product mix. However, just because we don't sell a product in the United States does not mean we're not going to get a U.S. patent. So, for instance, as of the end of last year, we had 120,000 patents globally that were active, including about 22,000 active U.S. patents. We had about 40,000 Chinese and European patents each at the end of last year. But in terms of the patenting, we just, for instance, Wi-Fi 6, which is the new version of Wi-Fi that is now being commercialized. It's out on the market. Huawei has about 20% of the standard essential patents that would be used when someone is making, using, or selling a Wi-Fi 6 enabled product.
Yeah.
So that is the type of R&D that, as Andy said, we actually have increased R&D funding up to $23 billion last year alone.
Right.
And so Huawei has no choice but to continue to innovate and still has product sales. However, those product sales geographically, the footprint has changed since 5 years ago. And also the product mix, there's a different focus for within various industries.
Andy, in our final minute with you here, given what Stephen was just talking about with ideation and R&D, what do your plans look like for 5G chip procurement domestically in China?
Well, we have been continuing to emphasize the diversification of our portfolio, of our supply chain, so that we can meet the needs of our customers. I don't have any comment yet on the explosion of news stories on what you're talking about, but we are proceeding on the assumption that we have certain limitations, and we're going to continue to grow our businesses in other areas, such as smart mining, smart roads, smart ports, electric power, railway, and moving into 5.5G, which is very exciting. Frankly, when you talk about the one piece of technology innovation, our leaders, Ken, who our vice chairman, has estimated, we look at AI, that 98% of all AI is going to be industry and some agriculture, and only 2% is consumer. And the focus recently has been on consumer, the generative AI. But it's going to be much more important than that to the world.
All right, Andy, thank you so much for joining us. Andy Purdy, Chief Security Officer for Huawei Technologies, and Steve Geisler, U.S. Chief Intellectual Property Counsel. And I know both of these gentlemen got their law degrees from the University of Virginia, so wahoo wah. So good stuff there. Appreciate talking to you about Huawei and the world of tech. Markets, they are higher. S&P 500 up 0.5%. Right now, let's head down to Washington, D.C., world and national news with Nathan Hager.
Breaking news out of Pittsburgh, Paul. A federal jury has found the man behind the deadliest anti-Semitic attack in U.S. history eligible for the death penalty. Prosecutors are seeking capital punishment against Robert Bowers. He gunned down 11 worshipers at the Tree of Life Synagogue in 2018. Today's verdict sets the stage for even further evidence and testimony on whether that 50-year-old truck driver should face death or life in prison. The Food and Drug Administration has approved the first over-the-counter birth control pill. Perrigo's once-a-day O pill can now be sold without a prescription. Company says it will start shipping it early next year, and there will be no age restrictions. Hollywood is bracing for its first industry-wide strike since Ronald Reagan was president of the Screen Actors Guild. Negotiators with SAG-AFTRA unanimously recommended a strike last night after 4 weeks of negotiations with producers. Matt Damon says it's important to protect actors who aren't household names like him.
$26,000 a year is what you have to make to get your health insurance, and there are a lot of people who residual payments are what carry them across that threshold.
The union is going to meet again at noon Wall Street time for a final strike vote. Actors could pick up picket signs as soon as today. President Biden is taking his NATO victory lap to the alliance's newest member state of Finland. He met with Finnish leader Sauli Niinisto and said his country will be an incredible asset to NATO and the world.
And the main reason is we have the same value set. I really mean that. It really matters.
And the president's also meeting with leaders of other Nordic nations before he heads back to Washington tonight. In Ukraine, they're surveying the damage after air defenses shot down 20 Iranian-made drones fired by Russia overnight, mostly in the Kiev region. Officials say the wreckage sent 2 people to the hospital. Several homes were destroyed, high-rise apartments damaged. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And we do have another mini rally going on today for stocks. It is 10:40 on Wall Street. I'm Denise Pellegrini. We check the markets all day long for you here on Bloomberg, and stocks are broadly higher after a report on producer prices for June showed inflation easing. The Dow right now up 90 points, about 0.3%. The S&P 500 up 24 points. That is about 0.5%. The Nasdaq, the big winner of the day, once again up 128 points, just about 0.9%. Amazon, one of the leaders today, shares up more than 1.5%. Adobe says U.S. shoppers spent almost $13 billion online during Amazon's 48-hour Prime Day. That was up more than 6% from a year ago, but still, I should also mention the expectation had been for 9.5%. And checking on Treasury markets right now, the yield on the 10-year, it is 3.8%. The dollar also in focus, getting a little bit more expensive to travel overseas as the dollar weakens. Dollar weakening as a growing number of investors think the Fed is maybe approaching the end of its rate hike cycle. But maybe just postpone that overseas trip. Don't give up entirely, because Bloomberg's David Finnerty says the dollar, it could end up strengthening again soon, because
if the pound or the euro, which are two big weightings in the dollar index and the Bloomberg dollar index, if they were to start faltering, the dollar by default would start gaining. So I think the question becomes there is not only will the BOE hike or ECB hike, that's sort of guaranteed and expected, it's how will the economies react to that? If those economies are forced into a recession, then and the US economy doesn't go into recession, then you could actually see sterling and euro coming under pressure, which would help the dollar by default.
Right, so Finnerty's saying there, watch for the dollar to possibly strengthen again from here. And another fight between Twitter and former employees. The former Twitter employee responsible for compensation and benefits at the social media platform suing Elon Musk and Twitter's successor X Corp. Now, this suit says thousands of workers were wrongly denied full severance after Musk took over the company. And Paul and Maddie, in response to Bloomberg Law's emailed request for comments, guys, Twitter sent us an automated poop emoji.
Oh my God, no, they didn't.
I have never, ever seen that. But I got to say, we're number one here at Bloomberg, and that is a Bloomberg Business Flash.
Whoa.
All right, very
That was a great
interesting.
flash. I was plugged into that Twitter news, Denise Pellegrini.
Yeah, the poop emoji. That's class. All right, let's check in on these markets here today. S&P 500 up 0.5%. We got another confirming inflation detail today. That inflation is, in fact, coming down. Michael Cugino joins us. He's a president and portfolio manager at the Permanent Portfolio family of funds. So, Michael, we're seeming to getting more and more data points that are confirming that inflation is, in fact, in decline, getting closer to the Fed's target. How does that kind of factor in with how you're thinking about your funds and kind of how you're allocating capital?
Well, we are balanced in the middle. We're allocating money towards precious metals, gold and silver, for example, U.S. and non-U.S. equities, and U.S. and non-U.S. bonds, real estate investment trusts, which have been really undervalued, and some of the commodity space, energy, and some of the the base material commodities. So we're driving down the middle, so to speak, because in our view, there's still too much of the unknowns out there to really predict how things are going to go. We see a bifurcated market between bond and equity investors, and they both can't be right. On the bond side, you got an inverted yield curve. It's looking more, bond investors look like they're expecting a recession at some point. Equity investors, equities are bleeding up despite declining earnings and despite, some other indications of maybe tightening financial conditions. Both can't be right over the long term, but in the short term, we have a bifurcated market.
Okay, so given that, and you mentioned T-bills, are you thinking any differently now about duration here? Are you thinking still very short T-bills at the moment, or are you looking more duration?
Well, we are still relatively short. Our durations across our products on the bond side are probably under 3 years. And so that's the longer end of the short space and the beginning of the intermediate space, I guess. And that would be based on the fact that, again, there's too many unknowns. So we don't think you're being compensated properly risk-reward going out too long. But like any bond investor, if you're getting near the end of a tightening cycle and you may have stable rates or declining rates, you're going to want to be looking at duration and probably extending. So there's a real tightrope you got to walk there right now. And like everybody else, I think we're doing that. We haven't extended duration yet. We're staying still high quality balance sheets because we are concerned about tightening financial conditions. But we are looking at duration actively and considering how and when and to what degree we might want to lengthen.
Michael, I mentioned you with your commodities caller. You mentioned gold here. It's had a nice run this year. How much more do you think has to go for gold?
Well, I think, again, it's based on, while the inflation is declining, you do have a lot of deficit spending. You do have a lot of geopolitical uncertainty. You have some question on the financial system. And if we do get a recession, what that will do. And gold tends to perform pretty well in recessions because it's likely that, the Fed moves to cut interest rates to offset that. And that would be a benefit or a tailwind to gold. In addition, you've got a lot of central banks that, generally speaking, have been buying around the world. You've got the longer-term, broader macro issues of an active campaign to possibly replace the U.S. dollar as a reserve currency, which, is always a risk out there. But you've had more and more countries expressing that desire and working together. And, in fact, some global transactions have been settled in currencies other than dollars. And that could be catastrophic for the U.S. and our financial condition and our ability to basically change the way we do business in the United States. If that were to ever come to play, and I'm not predicting that, but the risks are higher there, and gold would be an offset to that as well.
Do you feel like you're more interested in gold than some of the other asset classes that we've talked about because of the narrow rally that we're currently seeing and kind of the breadth in that rally?
I would say we view gold as a necessary component of broad financial planning and broad wealth creation. And so we're always fans of it because it has benefits that traditional asset classes like stocks and bonds do not have. That doesn't mean you want to, unless you're a trader, you're not throwing all your assets behind it. We certainly don't. But we do have a healthy allocation. And I don't know where we would stack up against others, but yes, I think given the landscape that we see out there, broadly speaking, we do think it's healthy to own gold. And in fact, we're slightly overweight our target.
You mentioned energy, and that had such a great run over the last couple of years. A lot of folks are wondering if that's played out. I say that we got WTI crude up again today at just under $77 per barrel. So, what's your energy call at this point?
Well, we like it long term. I mean, energy had a real good last couple of years, although this year, up until recently, it's performed really not that well at all. But in the long term, we like it. I mean, our belief, and I think of many, but not everybody, is that while we're moving towards more efficient, environmental energy sources that are better for the planet, there's absolutely no way that, given existing technology, the green energy options out there right now can cover global energy demand. They just can't, and it's a pipe dream to assume otherwise. And so we think that energy, fossil fuel is going to be with us for a while, whether it's natural gas, whether it's oil. While they may decline gradually, they're going to be there for a while. There's been a lot of underinvestment in that sector over the last decade. There's some catch-up going on in the last couple of years. Demand was anemic because global growth was slow. And the dollar was strong, which was a big headwind towards, the price of oil over the last roughly decade. And so we think over the long term, those conditions are going to reverse. We think demand will pick up eventually. We think that, supply may have trouble meeting that. Then you have political issues like what OPEC may or may not do, and or others, and U.S. production, which may increase or not. And so there's some variables out there that would impact the price as well. Right. And so it's performed really, really well the last couple of weeks.
All right, Michael.
We expect broadly it's going to continue.
All right, Michael, thank you so much. We appreciate it. Michael Cugino, President, PM, a Permanent Portfolio Family of Funds. We're going to go to Finland right now. President Biden is speaking with the president of Finland, a press conference. He's taking some questions right now, so let's go to Finland.
The U.S. presidents in the future from withdrawing from NATO without Senate's approval. What actions?
I'm sorry, without what? I'm sorry? I didn't hear the last part of your question.
In Washington, a bipartisan group of senators has repeatedly failed to pass through Senate a law that would prevent future US presidents from withdrawing from NATO without Senate's approval. What actions will you take to assure Finland that the US will remain a reliable NATO partner for decades to come?
I absolutely guarantee it. There is no question. There's overwhelming support from the American people. There's overwhelming support from the members of the Congress, both House and Senate, in both parties, notwithstanding the fact there's some extreme elements of one party. We will stand together. The American people known since the end of World War II and the formation of NATO that our security rests in the unanimity among European and transatlantic partner, us. And so this is, no one can guarantee the future, but this is the best bet anyone could make.
And my second question on that note to Mr. President Niinistö, hearing this answer that no one can guarantee a future, are you worried that the political instability in the US will cause issues in the alliance in the future? Let
me be clear. I didn't say we couldn't guarantee the future. You can't tell me whether you're going to be able to go home tonight. No one can be sure what they're going to do. I'm saying as sure as anything can possibly be said about American foreign policy, we will stay connected to NATO. Connected to NATO, beginning, middle, and end. We're a transatlantic partnership. That's what I've said.
It seems that the President has answered your problems, but I have to tell you that during this process, I met approximately President many times, but I would say about 50 people from Congress and Senate. And I think the message was quite clear, quite united. And I have no reason to doubt about USA policies in the future.
Let me say one more thing. We learned a hard lesson. Peace and security in Europe is essential to U.S. security and peace. The idea that there could be conflict in Europe among our friends and us not engaged has never happened in modern history. That's why we're staying together.
Next question, President Biden.
Oh, I've called on somebody. I'm sorry. Wall Street Journal. Andrew?
Thank you, Mr. President. You've said that Ukraine shouldn't enter NATO until after the war is over. Are you concerned at all that those comments could motivate Putin to keep the war going or discourage him from entering peace negotiations? And is there a serious risk that this war could drag on for years? And do you see any path toward the war ending with Putin still in power?
First of all, no one can join NATO while a war is going on, where a NATO nation is being attacked, because that guarantees that we're in a war, and we're in a third world war. So that it's not about whether or not they should or shouldn't join. It's about when they can join, and they will join NATO. The issue of whether or not this is going to keep Putin from continuing to fight, the answer is Putin's already lost the war. Putin has a real problem. How does he move from here? What does he do? And so the idea that there's going to be what vehicle is used, he could end the war tomorrow. He could just say, I'm out. But what agreement is ultimately reached depends upon Putin and what he decides to do. But there is no possibility of him winning the war in Ukraine. He's already lost that war. Imagine anyway, he's already lost that war.
Just on the question of a concern about it going on for years, is there a possibility that there's a stalemate and it's become...
I'm sorry?
The question of whether the war could go on for years, is there a possibility there's a stalemate and it can continue for quite some time?
Well, I don't think the war can go on for years for two reasons. Number one, I don't think that that Russia could maintain the war forever, number one, in terms of their resources and capacity. Number two, I think that there is going to be a circumstance where eventually President Putin is going to decide it's not in the interest of Russia, economically, politically, or otherwise, to continue this war. But I can't predict exactly how that happens. My hope is, and my expectation is, you'll see that Ukraine makes significant progress on their offensive, and that it generates a negotiated settlement somewhere along the line.
And I have a question for the Finnish president, but I would be remiss if I didn't raise my colleague Evan Gershkovich, who's been in prison for more than 100 days. And I just wondered if you had an update on the process for trying to get him out of prison, and if you're serious about a prisoner exchange.
Well, I'm serious about prisoner exchange. I'm serious about doing all we can to free Americans who are being illegally held in Russia or anywhere else for that matter. And that process is underway.
Like I told, we are discussing on DCA, the Defense Cooperation Agreement, and it has a lot of elements. They are still open, but we are open on negotiations, and I know that our counterpart is also very open. So let us see.
Next question goes to President Niinistö, please.
Yes, it's Helsingin Sanomat and Elina Väntönen.
Thank you, Mr. President. And my question is for Mr. President Biden.
Okay.
Or should I just say President Biden? You have repeatedly talked about Finlandization becoming NATOization of Finland. Now, based on
As what nation?
You have repeatedly talked about Finlandization becoming NATOization of Finland. Based on your long experience, how does that change Finland's place in the world?
Well, first of all, the context in which I said that was the gentleman who occupies a seat on the other side of your border in Moscow said he wanted the Findalization of NATO. I said it was more likely to get the NATOization of Finland. That's the context in which that was said. And what was the second part of your question?
I asked, how has Finland's position in the world changed during this NATO membership process?
Finland's already a strong, vibrant nation. I think what Finland's joining NATO does, and Sweden as well, when the Nordic countries are all members of NATO, it just makes the world safer. It significantly increases the prospect that there is less likely to be war. We're deadly earnest about the notion. We'll defend every single inch of NATO territory. And now we're on the way of getting to 32 NATO nations. That's a significant commitment. And so the likelihood of any nation voluntarily deciding they're going to attack one of the nations or Finland is highly unlikely. And so, but if it were to, they understand they're not just attacking Finland, they're attacking 31 other countries.
Next question, President Biden, please.
Oh, I'm sorry. I guess it's Arlette and CNN.
Thank you, Mr. President. We've seen more disarray with Russian generals, most recently with the firing of a general who criticized the defense ministry, this following that rebellion by Prigozhin. Does this raise any new concerns about Putin potentially doing more drastic things regarding Ukraine, like nuclear weapons, or potentially against the U.S., like election interference?
Well, first of all, they're already interfered in American elections, so that would not be anything new. They did that last time they tried to. But with regard to, I don't think there's any real prospect, you never know, but of Putin using nuclear weapons. Not only has the West, but China and the rest of the world has said, don't go there. Don't go there. Number two. Number three, I think that determining what happens to Prigozhin, what happens to what happens when we discuss this in Vilnius, is God only knows what he's likely to do. I'm not even sure. We're not even sure where he is and what relationship he has. If I were he, I'd be careful what I ate. I'd be keeping my eye on my menu. But all kidding aside, who knows? I don't know. I don't think any of us know for certain what the future of Prigozhin is in Russia. And so I don't know how to answer that question beyond that.
And if I could also ask you something about happening back home. You're seeing the GOP grappling with tying abortion rights to defense issues, including a block on military promotions by Senator Tuberville. What does this say about U.S. military readiness? And would you be willing to talk with Tuberville to try to work out some solution?
I'd be willing to talk to him if I thought there was any possibility of him changing this ridiculous position he has. He's jeopardizing U.S. security by what he's doing. I expect the Republican Party to stand up, and do something about it. It's in their power to do that. The idea that we don't have a chairman of the Joint Chiefs of Staff, the idea that we have all these promotions that are in abeyance right now, that we don't know what's going to happen, the idea that we're injecting into fundamental foreign policy decisions what, in fact, as a domestic social debate on social issues is bizarre. I don't ever recall that happening, ever. And it's just totally irresponsible in my view. And I just think that, I'm confident that the mainstream of the Republican Party no longer does not support what he's doing. But they got to stand up and be counted. That's how it ends.
And for President Niinisto, you've been working on fortifying the fence along the border between Finland and Russia. Is there anything that you're seeing recently that concerns you? And also, as a leader who shares a border with Russia, what more do you want to see done to deter Putin?
During the beginning of our application process, surely we had to make sure first trying to figure out every possible negative action we might meet, and surely how we respond on that. And we were very careful on that work. So at the moment, situation is quite calm. Hope it remains as such. But I just want to tell you that Finnish people do feel more secure at the moment. We have 80% of population supporting NATO membership, and more than 80% who say that we will also protect our allies. That's the Finnish position.
Thank you. This concludes the press conference.
Thank you very much.
All right, that was President Biden and the President of Finland with a joint press conference in Finland after a day of meetings between the two presidents, and Finland coming into NATO. So a momentous day there for Finland, for the United States, and for the North Atlantic Treaty Organization. Right now, let's get what are we going to do? Let's get a business flash. We're going to get a business flash. Who are we going to do that with?
Hey, Paul.
All right, let's do it. Denise Pellegrini. There we go.
Yeah.
Thank you.
Here I am on the other side of the column. It is 11:03 on Wall Street. And we check the markets all day long for you here on Bloomberg Radio with Paul and Maddie this hour. We do have another sign that inflation is easing. U.S. producer prices rose at the slowest pace in nearly 3 years. The producer price index for final demand rose just 0.1% from a year earlier. But, and you know there's always a but. On the other hand, a report on first-time jobless claims showed fewer people than expected filed for those unemployment claims, and that does show possible continued strength in the labor market. And Torsten Slok, chief economist at Apollo, says inflation easing a bit does mean the Fed will start to shift its focus.
It's all about the dual mandate. That for a long, long time they've been focusing on the inflation part of the dual mandate because it was very clear that inflation was and still is at levels that are too high for their comfort. I do think that the narrative, both for the Fed and also for markets, will now begin to change towards growth or towards employment. In other words, what are the reasons why we're still having this strong economy. And if the lagged effects of monetary policy that they have spoken about for so long, where it takes 12 to 18 months to slow the economy down, well, the lagged effects of Fed hikes will eventually begin to slow things down. We're already seeing that across all indicators, and we should expect that also to happen over the coming quarters.
And Slock with us there on Bloomberg Radio and Television. Stocks, as I mentioned, are higher. The Dow up 71 points now, about 0.2%. The S&P 500 up 26, 0.6%. The Nasdaq up a whopping 147. That's more than 1%. The yield on the 10-year Treasury 3.81, let's call it, percent right now. Crude oil right now, it's up slightly, up at $76.50 a barrel. And spot gold right now, it is also higher. Delta Airlines shares soaring, some strength in the air there. Delta sees global travel pushing summer profit past estimates. And we're learning now that Cargill is behind that big cocoa trade that's been rattling the London market that we've been telling you about. The world's largest agricultural trader, been building a dominant market position there. Now that trade comes after 2 years of shortages in chocolate. And forget Goldfinger, they're calling this one, guys, Chalk Finger event, with Cargill basically cornering the market. And it all means, unfortunately, you'll be paying more for that chocolate bar and your chocolate mousse and also your holiday candy this year. So if you're not watching what you eat, as we just heard President Biden say, apparently jokingly, that Putin from Russia should be doing, you're going to be bummed out when your chocolate is more expensive. And that is a Bloomberg Business Flash.
All right, Denise Pellegrini, thank you so much. We appreciate that. Madison Mills, Paul Sweeney here in our Bloomberg Interactive Brokers studio, and of course, streaming live on YouTube. Just head over to YouTube and search Bloomberg Global News. And we are joined, Maddie, this hour with none other than Barry Ritholtz. He's got a little podcast known as Masters in Business here at Bloomberg, and he also runs a couple shekels over at Ritholtz Wealth Management. Barry, thanks so much for joining us here.
Thanks so much for having me.
Who's on the podcast this week?
Tom Wagner. He is the co-founder and CIO of the $10 billion Knighthead Capital, which is a distressed asset and turnaround investor. And lately, he's been making news because he's been doing these fascinating sports investments with his friend and co-investor, Tom Brady.
Oh.
They bought a pickleball team. They bought Birmingham United in the British Football League. They bought an endurance auto racing team. They've really looked at sports as the next great entertainment franchise. Especially away from the major sports. There's a lot of action out there.
And meanwhile, Disney's thinking about what do we do with ESPN? Again, spin out, sell it, merge. It's just a whole bunch. So
giant moneymaker for Disney.
Yeah, it used to be, and now it's a little bit of an issue with the cord cutting. All right, let's get to these markets right here. Green on the screen, Jess Menton. She covers all the equity stuff for Bloomberg News. She joins us here in our Bloomberg Interactive Broker Studio. Jess, what are you looking at?
So I have to bring up what's happening with the CPI-PPI spread, because that's a key gauge when not only are you looking at, obviously, producer prices. We've talked a lot about that this morning, about how they rose at the slowest pace in nearly 3 years. But I started writing about the CPI-PPI spread at the end of last year, and your good friends, Gina Martin Adams over at Bloomberg Intelligence, they're the ones crunching these numbers. So it actually had turned into positive territory for the first time in 2 years back in December. And so that really led the way if you were looking at what that means for input prices, especially for businesses, and typically that'll filter in through there for that improvement before they actually go to consumer prices. So if you were looking at that indicator back at the time, potentially if you fast forwarded, you could kind of see where we're at now as far as where inflation has obviously improved, but really that was telling you that that was going to help boost those profit margins, and especially when you're seeing consumer prices rising more quickly than when you're looking at producer prices. But that is a pivotal shift there as far as a signal of how corporate margins, potentially the worst is past when you're looking at Gina's data from Bloomberg Intelligence, and that typically fuels stronger gains. The question there being, though, after a strong first half, how much of that could potentially already be priced in. But I was talking to Michael Casper, who's also on Gina's team, and he still thinks the worst of the pain is already passed, so that still could support stock prices in the second half of the year.
So I wonder, I know everyone's focused on bank earnings tomorrow, but I'm also curious about the NASDAQ rebalancing, Jess, and I know that you and your sources talk about this quite a lot. What are you thinking about that?
Well, Chris Harvey over at Wells Fargo, who's definitely been on the bearish side and continues to be bearish, his team was arguing that with the rebalance, they're saying that would hit the biggest names in the index, but you have a lot of other people who aren't on the sell side of strategists and arguing that they still don't think that that's likely going to happen, but that rebalance is actually going to happen next Friday. So that'll be a key indication. This is a very special instance of that happening, but you do still have sell side, some of those still on the bearish side of things, but Chris Harvey in particular has kind of been calling it wrong over the past year. So it is a question about whether or not that'll actually happen.
I love to hear from people who've gotten it wrong.
Yeah.
And what I really want to hear from them is, why has our model or why has our process been wrong?
Right.
And, at a certain point, late or early is the same as wrong.
Yeah.
And so I'm perplexed. I have to be honest. I have looked at all the criticism of, the market is too concentrated. The indexes are too concentrated. I think that's the wrong way to approach it. I want to ask people, from the morning you wake up till you put your head on the pillow at night, every single thing you do is driven by technology. Wait, the tech sector is 29% of the S&P 500? How come it's not more? How come it's not 40 or 50%? You can't do any, even go for a walk in the woods, and guess what? The shoes you're wearing were designed on a computer. They were shipped by a logistical company that relies on technology. You probably ordered them online. There's no escaping technology. It's every part of our lives.
Yeah, I actually wrote a weekend piece about that,
sure
about the health of when it comes to technology. I just sent it to Barry, so you could take a look at that. But it kind of goes with what you're saying with your argument.
Jess Metton, thank you so much for joining us. Jess Metton, she does it all. She's on radio, she's on TV, and oh, by the way, she is a reporter for Bloomberg News, writing stuff all the time. We appreciate that. All right, coming up, let's take a look at the auto business. But this time, it's not like what's the new car coming out that Barry can opine on, or Matt Miller will burst into the studio and talk about. We're talking about, they might have some strike issues with their workers there. Kriti Gupta joins us. She is the host of Bloomberg Surveillance Early Edition of Bloomberg News. So, Kriti, what's happening with the automakers and the workers?
Yeah, well, look, this is my latest obsession. As you guys know, I jump from story to story and really dive in. So this is my latest one. Look, unions are going on strike negotiations across the country. Today, you are seeing the United Auto Workers, which represents about 150,000 workers in Detroit and across the country, going into negotiations with the big three car makers, General Motors, Ford, Stellantis, and they're basically going to say, we need more money because inflation is high and it's sticking around. And this is a really big deal because it's coming right off on the heels of UPS and Teamsters and those negotiations, making some progress and then kind of collapsing. We, of course, also have Hollywood on strike as well. The actors now kind of banding together with the screenwriters. I think Bob Iger on CNBC said they're making things really tough for the studios. Well, yeah, obviously. So that is kind of the takeaway here. People are really kind of struggling to keep up with inflation, and they're going to bat. Now, the market read-through is interesting here because Bank of America actually quantified this, and they said if the United Auto Workers do eventually go on strike, their contract ends September 14th, and already the president, Sean Fain, is saying, we're willing to go on strike, don't question us. It's going to cost these automakers billions of dollars that they just don't have.
So that was going to be my question, because Vanity Fair had this exclusive story about how studios are willing to wait until writers can't afford their apartments anymore and give up on the strike. So I'm curious what the read-through of that situation is to a General Motors, to a Ford. It sounds like they can't afford to lose out on their workers until they give in and say, we actually don't have the money to continue striking here.
Yeah, well, it's kind of a game of chicken, isn't it? Who is able to tap out first at the end of the day? For the Hollywood writers, I think it's a different story because a lot of the screenwriters, they're not necessarily on, they work freelance, they're contractors at the end of the day. They're not working on kind of a salary or even like an hourly wage. In the industrial space, when it comes to UPS and Teamsters, a lot of these automakers, it is an hourly wage. And it's actually a big difference between the full-time wage and the part-time wage. And so it's a little easier, I think, to enforce on that front. What's interesting to me is that this is so tradable here because they are willing to say, we will walk out because you're trying to scale up your manufacturing right now. We hear this all the time. General Motors and Ford trying to compete with the likes of Tesla, for example. Matt Miller's ears are ringing somewhere. But to do that, you need people at the end of the day. So they have a lot more bargaining power. And this union is really special because they just made some progress with John Deere about 2 years ago in kind of implementing some of their wage increases. And plus, they've already been on strike in 2019 for about 6 weeks. So they've gone through this whole thing. They're willing to walk out. They have a demonstrated kind of track record of doing so. And by the way, during that 6-week period, those car maker stocks took a beating. So there is very real money here. It's very tradable from an investor perspective, but also they have some weight behind them, especially when UPS and Teamsters is setting this tone of kind of go big or go home.
Really, really quite fascinating. What ends up happening as more and more of these auto manufacturing plants become that much more automated and roboticized? How many bodies do they need? If you look at some of the newer Tesla factories, they really are low human, high technology shops.
Yeah, but not always profitable. And I think that's the key piece. When you try to automate, that takes a lot of money and it takes a lot of manpower to get that. And even the fewer people you need on the ground then end up costing more to deal with all the automation. So there is that piece of it. But I completely agree. And I think demographically, you're kind of seeing that switch. You saw it in DHL, you saw it in UPS, FedEx are all trying to limit their human workers, really emphasize the automation. What I'll say on that, though, as well, is when you look at how some of these car makers are actually functioning, one of the, I want to say, pieces that a lot of these car makers have kind of in their back pocket is inflation is coming down. So if your argument here is inflation's high, we need more to kind of make up for inflation and have our real wages show up in a bigger way, well, inflation is coming down and you're trying to lock in a contract that's going to last 4 or 5 years.
Right.
So they don't have as much, perhaps, negotiating power as before.
Kriti, how much has the previous shortfall of semiconductors been affected automakers? Have they caught up? Is there still, because I know a lot of cars you go to order and it's 6 months to a year out. Are we still dealing with the hangover from the pandemic lockdown?
We're not dealing in terms of their regular production. Where you have the issue is simply this idea of scaling up, because you're not just scaling up your regular kind of gas cars, which will require more chips as a function of that, but you're scaling up EVs, which require even more chips. And so it's the scaling up that's the issue at a time when the Biden administration is actively making it tougher to actually source some of those chips from Taiwan and elsewhere. So it's not an issue at the moment, but it could be an issue in a couple of years when you start to see a lot of the domestic chips cost a lot more money because they are made stateside.
All right, Kriti Gupta, thank you so much. We appreciate it. Kriti Gupta, she's the host of Bloomberg Surveillance Early Edition. She's also doing some work here on this automaker news. I mean, a strike would not be good. I mean, think about they haven't had the last strike with the UAW was in 2019. Were 50,000 employees from GM, and that lasted 6 weeks. So
That's
that
a
would
long
not be
time.
good. I mean, you just came through the pandemic. You've still got supply chain issues. Things are starting to crank now. You're making a transition to EVs. Just another example. They got to work things out, and even more so. You mentioned the writer strike. I mean, Jesus. I mean, I don't know how they allocate the equities there. So we'll have to keep an eye on that.
You know, it's not a coincidence that you end up with.
All right, let's get some company news with Steve Rappaport.
Paul, we had shares of Delta hitting a 2-year high after topping expectations and raising its full-year guidance. Earlier, we heard from Bloomberg intelligence analyst George Ferguson. He predicts that growth will continue into the third quarter, noting that some of that was already baked in. But the question now, will it roll into the fourth quarter of this year and Q1 in 2024? Hollywood is bracing for a shutdown as actors say contract talks with studios have collapsed. What's going on with that is the big issue: streaming royalties from streaming platforms. Here's the deal. The actors are saying they want a bump in pay that is commensurate with a show's success. The studios are saying, whoa, hold on a second. We don't know how this is going to go because they argue those platforms have yet to make a profit. So if the actors do walk off the job in joining Hollywood writers, that would be the first time that Hollywood has a simultaneous strike since in 63 years. So we're watching that closely. And we have big numbers out of Amazon. They were up after the company reported record sales during its Prime Day promotion. Paul, what'd you buy?
Oh, I can't mention it on air.
All right. Well, I ended up buying one of those ring. Vacuum. Which one?
Dyson.
Ooh,
I had
Dyson.
To splurge. I'm almost 30. Yeah,
fancy.
It's time.
Very good stuff. Yeah, I ended up with a Ring doorbell. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 11:20 on Wall Street. We check the markets for you all day long here at Bloomberg. We do have a mini rally going. Stocks are higher. Investors reacting to that weakening inflation in the form of that report today we got on producer prices. Now, on the other hand, we do have some signs of strength, and that's in the labor market. Weekly jobless claims, they came in weaker than expected. And the Dow, the S&P, and the NASDAQ, they are all higher. The yield on the 10-year Treasury right now, let's call it 3.8%. Spot gold also higher. NYMEX crude, it is higher. It's been hovering just around the $76+ a barrel for most of the day. We do have some bearish sentiment on oil longer term, though. Global oil demand, guys, isn't expected to grow as fast this year as previously thought, and that is due to the faltering economies of developed nations, according to the International Energy Agency. And here's how IEA Head of Oil Markets Division Tariel Bassoni puts it.
We're seeing weakness, especially in Europe, and as the manufacturing remains weak, we're also seeing some negative sentiments in China.
And Bassoni there on the pulse with Francine Lacroix. And you know how so many people are working remotely, even if it's just maybe coming into the office a couple days a week? Well, of course, all this has, far fewer people showing up in office, and demand for office space is really faltering. And now McKinsey Global Institute says, with office attendance at just about 30% below pre-pandemic levels, remote work could actually wipe out some $800 billion from the value of office space globally. That would be a 26% plunge. Could be a good time, though, to rent space, because office space in New York City, it's way cheaper than it used to be. And that is a Bloomberg Business Flash.
Denise Pellegrini, thank you so much. We appreciate it. Madison Mills, Barry Ritholtz, and Paul Sweeney here in our Bloomberg Interactive Brokers studio. We got it covered. And we're welcoming Randy Schwimmer into the studio as well. Always love chatting with Randy. He's co-head of senior lending, and he's the senior managing director at Churchill Asset Management. Randy, one of the many reasons we love speaking to you, because you're an expert in this private credit business out there, which has been such a hot market, getting lots of capital, and has really become a big part of the capital markets, really past since the great financial crisis. How is your business today in what appears to be a market that is seeing inflation moderate, maybe taking the recession story off the table a little bit. How are you seeing that in your business of directly lending?
Yeah, first of all, thanks again for having me on. So I did some homework just for you, Paul. So looked for the first half numbers for our business to sort of get a sense for how we're doing. Turns out, and we have a senior debt business and a junior capital business, all under the Churchill banner. We did 175 deals in the first half of the year, okay?
Really?
$5 billion across those two platforms, right? So I was like, whoa.
How big is your firm, by the way?
So we're like total committed capital of about $46 billion.
Jeez.
And then you throw our Arcmont sister company in Europe, they're another 25 billion. So, but the thing that surprised me a little bit is that despite a lot of the softness in M&A that we saw in the first half, what's driving our deal flow is the kind of migration from public credit to private credit, because the banks have been a bit offline with some of the liquid loans. They don't have clearing price, they don't have CLO formation. A lot of the cash is coming out of retail funds, not going in. And so they're a bit offline, and so a lot of that activity has come to the direct lenders, so that's helping us. And then we have the scale, we can commit, $400 or $500 million per deal and get stuff done. So those combination of things makes it right now pretty attractive.
So back when the Fed was at 0 and the 10-year wasn't even at 2%, the demand for private credit from investors was very high because a huge premium with not a whole lot more risk for better returns. Now that you could get 5% plus on corporates and munis are not that far behind, how does that affect your investor base? What are they looking at in the world of private credit as an asset class?
So Barry, that's exactly the question that comes up at these investor meetings. And the answer is that the opportunity in private debt is not necessarily a timing thing, because to your point, it was very attractive 2 years ago. It's more attractive from a pure yield perspective today, still relative to corporates. The question is, how long will that attractive corporate and high yield bond trade last? If what Paul says is true, and we're starting to see a little softening in the numbers, which we saw today, and it looks like the Fed might, maybe they raise once more, maybe it's once and done, then at some point rates are going to start to come down. What's going to happen for investors who are looking for long-term income streams is they're going to see those corporate bond rates start to come back down again. And eventually, whether it goes back down to where bonds were kind of 3% and 4%, the way they were two years ago, or something in between where they are now, it's going to come down. Whereas the illiquidity premium that investors in private debt get has been the same throughout that period, roughly 300 basis points. So whatever liquid is getting, we're getting 3% more.
We've been discussing the window that has been opening up to extend duration, lock in higher rates after the better part of a decade of bonds not really generating a lot. Suddenly, whether it's private credit or corporates, this whole asset class has become a whole lot more attractive, but who knows how long that window is going to be open for.
Correct. And so the thing about private debt is that you can trace the higher yields and better structures and all the things that back for decades. So the opportunity really isn't a timing issue. It's more of a strategic issue. You decide that you are going to have some part of your portfolio always in private debt. And so what we're seeing now with our investors, an increasing number of them are saying, I want 5, 10, 15%, whatever that number is, always in my overall portfolio. I have room for fixed income. I've got room for public equities. I've got room for real estate, but I really want some core assets in private debt.
But does that allocation start to change as people maybe get a little bit of FOMO for things like an AI rally, for example?
Well, what's happening in the public markets is that things will come and go depending on where the current trade is, to your point.
Yeah.
And we saw, obviously, rally in technology stocks and so forth. But what happens is, depending on what's going on with the rest of the economic climate, some of those opportunities tend to fade. We certainly saw that with crypto. We've seen that, in other areas. The SPAC rally,
Sure.
for example, that we were talking about here in the studios a year or two ago. And the thing that investors really want to focus on now is stability, okay? So yield is great, but stability of income is even more important to them. And so going into it with a manager that has a track record to deliver these stable, higher returns is probably foremost in their minds right now.
What sectors do you guys like these days? You did a gajillion transactions in the first 6 months. Are some sectors you really like here, or some you're avoiding?
I knew you were going to ask this question, Paul, and so I went back, and by far and away, it's business services.
Yep.
Because things that companies like landscaping companies, I like to use this because regardless of whether a building is occupied or not, you still have to mow the lawn, plow the snow, trim the hedges. And so landscaping companies, because they have to be there 24/7, alarm companies, same thing, security businesses, anything where you have consistent cash flow and growth over a long period of time, those are the kinds of companies we like. Healthcare, technology, software, logistics businesses, anything that requires moving boxes around right now. I mean, I don't know about you, but my family's ordering more boxes, delivering to the front door. And all the support, the back office, the middle office, related to those kinds of businesses are doing well right now.
Really quite interesting. Last year, before we really had a firm grasp of exactly how fast and far CPI would fall, a lot of people piled into private debt, especially with a lot of younger companies. You guys have been around for a long time. I'm wondering how you look at the competition in the space and how many people kind of top-ticked the market last year.
Yeah. So one of the questions from a credit perspective is, did you go in with companies that are now hurting as a result of some of the dynamics, inflation-wise, you talked about? And the advantage that we have is that we invest only with private equity-backed companies. And so the amount of cash equity that they're putting into these businesses is like 65% of the total capital structure, which is a record high. The other thing is, they have their own money at stake. They're helping us to find the best companies. And even in that universe, we're still just kind of picking the best of the best. So we see 1,000 deals a year, and we do 60. And so from that perspective, what we're looking for is to sift through the ones that don't have that long track record, sift through the ones that are not cyclical, that don't have customer concentration. We just turned a deal down this morning because the business has only been around for 5 years and had customer concentration with 3 main customers. If you lose any one of those 3, you're in trouble. So our job is to really pick winners.
I understand you're a tennis fan.
Yeah, going to Wimbledon this weekend.
Are you? So
yes.
what are you gonna see?
The women's finals.
The women's finals.
Yes, sir.
All right, we had one of the semifinals that just got done earlier. So we have one finalist in there. It's funny. That should be great. Have you been there before?
I've never. This is my first time.
It's awesome. You're gonna love it.
I'm not playing, but I am. I'm gonna watch.
All right, very good. Randy Schwimmer, co-head of senior lending, and he's the senior managing director at Churchill Asset Management. We love checking in with Randy from time to time to get a lay of the land in terms of private credit. Which, if I were coming back into the business, private credit would be the place I'd look if I were a young banker. Lots of opportunities there.
Same. If I was smart enough to go into banking, that's absolutely what I would have done.
Go get an MBA. Come on back. Randy will hire you. S&P 500 up 0.5%. Right now, let's head down to Washington, D.C. We're going to get world and national news, and we're going to do that with Nathan Hager.
Paul, Putin has already lost the war. That is what we're hearing from President Biden at the end of a 5-day European tour aimed at strengthening NATO and shoring up support for Ukraine.
He could end the war tomorrow. He could just say, I'm out. But what agreement is ultimately reached depends upon Putin and what he decides to do. But there is no possibility of him winning the war in Ukraine. He's already lost that war.
The president spoke at a joint news conference with Finland's president in Helsinki. He says Ukraine will become a member of NATO, but not while it is at war with Russia. The man behind the deadliest anti-Semitic attack in U.S. history is eligible for the death penalty. A federal jury in Pittsburgh announced that verdict today against Robert Bowers, siding with prosecutors who say the 50-year-old truck driver planned his attack on the Tree of Life synagogue for 6 months and has only expressed regret for not killing more people. 11 worshippers were killed in that October 2018 mass murder. Today's ruling sets the stage for more testimony and evidence in this penalty phase. For the first time in this country, birth control will be available without a prescription. The Food and Drug Administration has approved Perrigo's once daily O pill for over-the-counter sales. Kelly Blanchard is president of IBIS Health. She says this removes a major barrier.
Those barriers from the prescription requirement have a bigger impact on Black people, Indigenous people, Latinx folks, Asian American Pacific Islander folks, other folks of color, young people, folks working to make ends meet.
Kelly Blanchard's group is one of the nonprofits that backed the move. The Secret Service has wrapped up its investigation into that baggie of cocaine found at the White House. A summary obtained by the Associated Press says no fingerprints or data were found despite a sophisticated FBI analysis, and surveillance footage could not identify a suspect. Global news, 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 11:40 on Wall Street. We check the markets for you all day long here at Bloomberg, and we did have quite a mini rally going on. We're pulling back a little bit, but stocks are still higher. Techs are leading the gains after a report on producer prices indicated inflation for June easing. The Dow right now up 26 points. The S&P 500, it is up 23 points. And Ed Yardeni of Yardeni Research, by the way, telling us earlier the S&P will skyrocket to 4,800 as the roaring 20s, he says, return. Remember, Yardeni is the one who nailed the October low. So we're watching that one closely. And tech stocks, as I mentioned, they are also higher. They're really holding the fort right now, 171 points higher. On the S&P right now, that's more than 1.1%. Amazon, one of the leaders today, shares up almost 2% now. Adobe says U.S. shoppers spent almost $13 billion online, $12.7 billion to be exact, during Amazon's 48-hour Prime Day. Home furnishing sales, those were up big, and that was a 6.1% gain from a year ago. Should also mention, though, the expectation had been for a 9.5% gain. So a little bit of a disappointment, but investors don't seem to care. In the Treasury market right now, the yield on the 10-year, 3.8%, we'll call it. And the dollar in focus, getting a bit more expensive to travel overseas as the dollar weakens. A growing number of investors think the Fed is approaching the end of its rate hike cycle. That's why we're seeing this dollar easing, but maybe just postpone that overseas trip. Don't give up entirely, because Bloomberg's David Finnerty says the dollar could end up actually strengthening again soon, because
if the pound or the euro, which are two big weightings in the dollar index and the Bloomberg dollar index, if they were to start faltering, the dollar by default would start gaining. So I think the question becomes there is not only will the BOE hike or ECB hike, that's sort of guaranteed and expected, is how will the economies react to that? If those economies are forced into a recession, then and the US economy doesn't go into recession, then you could actually see sterling and euro coming under pressure, which would help the dollar by default.
So if that is why you're traveling overseas, Bloomberg's David Finnerty there saying you might be able to get more bang for your buck if you're paying with dollars, if you just wait a little while longer. And that is a Bloomberg Business Flash.
All right. Thank you so much, Denise. We are really excited about our next guest here because we've got Laura Modi coming on. She is the CEO and co-founder of Bobby. This is an infant formula company. It's organic. They've got some big name investors on the list here with Gwyneth Paltrow at $22 million. And we're excited to talk with them, Paul and Barry, because they've got some big news for us. This company acquiring Nature's One. We don't have the exact details in terms of the finances here, but it was a $70 million Series C round of funding to acquire Nature's One. And this is part of their overall strategy to kind of diversify their holdings here. So I think we have Bobby. We've got Bobby's CEO on the phone here, Laura Modi. Thank you so much for joining us, Laura. As I was just explaining, this acquisition of Nature's One, how does that acquisition factor into your strategic push to increase domestic access to infant formula here in the U.S.?
Yeah. Hi. Lovely to be back with you guys again. Look, this acquisition is so much greater than Bobby and Nature's One. The significance of our two companies coming together is the biggest diversification move in the history of U.S. infant formula. And after last year's shortage, this is what the industry needs. We need more competition, we need more options, and this allows us to be able to serve more of the market over the coming years.
So what does Nature's One do? So talk to us about this, what this company does and kind of how it dovetails in with kind of your business at Bobby and the baby formula delivery business.
Yeah. So Nature's One is actually, pioneers in the world of organic and purity. They've been around for the last 26 years. They've spent the majority of their time focused on toddler formula. I would actually refer to their founder and CEO really as the godfather of formula here in the U.S., an organic formula. He had the foresight back in 2019 to build a state-of-the-art infant formula facility in Ohio. And he had no idea what would come in 2022 when we were hit with the national infant formula shortage. But in 2022, at the end of last year, it got completed, and he became the first new infant formula facility to be built in 40 years from the ground up in the U.S.
Laura, Barry Ritholtz here. So it sounds like putting together a couple of these parts, you're going for scale so that if there is any sort of disruption in the future, you'll be able to meet consumer demand. How large do you have to be to avoid the sort of problems that we saw during the pandemic and the lockdowns?
Great question. You know, this is not just about building one facility and calling it a day. We need to build redundancy. This industry needs resiliency so that we don't go through this again. So to date, we've been using a contract manufacturer to make our product, and we're going to keep doing that. We're going to double down with them. We're going to stay with them longer while we also build the resiliency to get our own facility up and running to also produce more product. The downside of last year was that there was few facilities making too few products. So when one of those facilities is no longer able to produce product, we're going to be experiencing a shortage. Now, I will admit that Bobby is not going to be the cure-all solution to ensure that we avoid this, but I'm going to do my damn best to make sure that Bobby's never in the center of another shortage again.
And as many of our listeners know, we started speaking with Laura back in the pandemic, again, when this shortage came to the fore, and we needed to get real smart on the baby formula business real quick, and Laura was kind enough to speak with us several times during that process. So it's great to see Laura and Bobby continue to grow here. So Laura, give us the lay of the land today. How have things changed in the greater, baby formula business as it relates to logistics? Are we in a better place today than we were, a year ago, 2 years ago?
Well, I'd like to think after yesterday's acquisition, we are, but the shortage itself is beginning to subside, which means shelves are getting stocked and there's access to more formula. But it's spotty, and it's spotty because consumer buying behavior has also changed. So there may be some shelves that remain out of stock while others are plentiful. What we need to do is we need to adjust to this changing landscape and consumer behavior, which includes what are the products that they need now and where do they need them. That, I would say, is we're still somewhat in a crisis from that respect. The other thing that hasn't changed is we're still putting out products from the same few facilities. We are not in a position as a country where we can turn around and confidently say that if another bacteria hit a facility that we wouldn't be in this again. I actually think we are truly one bacteria away from having another shortage like last year. And the only way to get out of that is through the incentives and investment made in further domestic manufacturing.
In our final couple of minutes with you, Laura, I want to switch gears a little bit because I'm so interested in your history and your previous life before Bobby when you were working at Google. And you've talked about day trading as an important part of your time there that helped you to buy your first home. And that's why it was so important to you to kind of open up investment into Bobby for Women in particular. Talk to me about the other ways that being a trader yourself has impacted the way that you run the business.
Great question. Did not see that coming.
I'm a big fan of the Cut because I used to work there, so that's where I'm getting that.
I love it. Look, my passion is really in women having financial independence. And I think in a lot of ways, whether it's trading or just understanding the financial system, women are often left in the dark and behind. It can be sometimes seen as an old boys club, whether it's from the nomenclature to just the tools that exist. So one of my deep passions is making sure that we are growing a business to allow women to become financially savvy, and you see that in many of our practices today. One of those is that I think it was in our fundraise for our Series A, we opened up a small portion of the round to allow our own customers, moms, to invest in the business.
Yep.
And instead of having a minimum dollar to be able to put in, we actually created a cap. And that allowed 700 moms to be able to invest in the business.
Yep. That's fascinating story all around here. We're glad we get to stay in touch with you, Laura, and keep us up to date what's happening in your business and your industry. Laura Modi, CEO and co-founder of Bobby. This is Bloomberg. Let's get some company news right now. Steve Rappaport.
Paul, shares of Perrigo are up after the company's over-the-counter birth control pill won FDA approval. Perrigo expects Opil to be available for consumers to purchase over-the-counter by early 2024. Price of the drug, still unknown. Disney boss Bob Iger gets a contract extension in his second stint leading the entertainment giant. More from Bloomberg's Alex Webb.
Investors like him. Studio seems to like him. He's very astute and adept politically. His predecessor and previous successor, Bob Chapek, ruffled a lot of feathers while he was briefly in the role. But the fact that he's extending from the end of 2024 to the end of 2026 indicates they don't really have a clear successor in mind, or if they do, they possibly think that person needs more grooming. We don't know who it might be.
Alex Iger says he got the extension because he found more challenges facing Disney than he initially expected, particularly the decline of live broadcast and cable networks. Iger says the company is looking for strategic partners that could help with distribution or content in that area. And authorities have arrested former CEO of Celsius Network, Alex Mashinsky, on many charges, including wire fraud, and that's a year after Celsius filed for bankruptcy and declared a $1.19 billion deficit. The Securities Exchange Commission, the Commodity Futures Trading Commission, and the FTC have also filed lawsuits against Mashinsky and the company. And those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg. Stay tuned for more Bloomberg Markets coming up with Paul Sweeney. That's right after this. You're listening to Bloomberg Radio.
You're listening to Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, Madison Mills, Paul Sweeney, and Barry Ritholtz from Bloomberg Interactive Brokers Studio. Looking at the markets here, up about 0.5% for your S&P 500. NASDAQ up 1.1%. We also have a bid, I'm going to call it out again, for WTI crude oil up another 0.5%, $76.11. Didn't see that coming, but a lot of folks are saying that the demand is out there, folks. So that's where we go there. Right now, let's head down to Washington, D.C. We're going to get world and national news, and we're going to do that with Nathan Hager.
All right, Paul, thank you. President Biden says he does not think Russia can continue fighting Ukraine indefinitely. He is wrapping up a 5-day trip to Europe focused on supporting Ukraine and shoring up NATO.
There is going to be a circumstance where eventually President Putin is going to decide it's not in the interest of Russia, economically, politically, or otherwise, to continue this war.
The president spoke at a joint news conference in Helsinki with Finnish President Sauli Niinistö. He also said he is serious about pursuing a prisoner exchange for the Wall Street Journal reporter being held in Russia. Evan Gershkovich has been detained for more than 100 days on espionage charges. This month, the Kremlin suggested it was open to a swap if talks were held behind closed doors. President Biden says that process is underway. The first industry-wide Hollywood strike in more than 60 years could begin this afternoon. The Actors Union, SAG-AFTRA, is getting ready to meet in moments on a final vote to stop work after 4 weeks of talks with movie and TV producers ended last night without an agreement. Matt Damon says it's important for actors to hold out on their key issues.
Nobody wants a work stoppage. It's painful for every other guild, really painful for IATSE and all of our brothers and sisters there. Nobody wants that, but we gotta be working under contracts that are fair.
IATSE, in case you don't know, is the union for stagehands and other behind-the-scenes workers. Hollywood writers have been on strike since mid-May. The gunman who killed 11 people at a Pittsburgh synagogue in 2018 is eligible for the death penalty. That ruling from the federal jury sets the stage for more evidence and testimony against Robert Bowers in the Tree of Life synagogue shooting, the deadliest anti-Semitic attack in U.S. history. The jurors sided with prosecutors who say Bowers planned the attack for months, and his only regret he's expressed has been that he didn't kill more people. Bowser's attorneys have said he was delusional and his life should be spared. We've seen history made at the All-England club. Marketa Vondrasova defeated Elina Svitolina in straight sets today. She is now the first unseeded woman to reach the Wimbledon finals since Billie Jean King did it back in 1963. The 24-year-old Czech left-hander will face either number 2 Aryna Sabalenka or last year's Wimbledon runner-up for the Wimbledon title match on Saturday. Global news, 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager in Washington. This is Bloomberg. Paul and Madison.
All right, Nathan Hager, thank you so much. We appreciate it. A dozen contrarian thoughts about inflation penned by one, Barry Ritholtz. Barry, what do you got for us?
So, you know, it's funny. I've been tracking inflation for a long time, and I'm always astonished how people get this so wrong and continue to get this wrong, starting with the Fed, who is late to get off their emergency footing, late to recognize inflation had blown through their 2% upside target, late to start raising rates, and now they're late to recognize they already won. How many times on the show have I said, hey, you guys won, inflation is defeated, unfurl the mission accomplished banner and take the rest of the year off. So if you want to read this sort of long, meandering discussion, you go to ritholtz.com. But let me just share a couple of my favorite bullet points that I think everybody gets wrong.
45 seconds.
Long and variable lags. Yeah, that was true in the 70s when mortgages were 12% and unemployment was at 7%. But today, the Fed raises rates and you see an immediate reaction or relatively quickly in housing markets. And the other thing is, I think the Fed was right about transitory. It just took longer than expected.
That's a crazy take, Barry.
Right? Transitory, instead of taking a year, it took 24 months. Not so crazy.
All right, Barry, good stuff. Check it out at ritholtz.com. There you go. And those contrarian calls on inflation. But we got some PPI data today, CPI data yesterday that really, I think, puts to rest this concern about inflation here. We'll have to see how the market thinks.
This is Bloomberg Markets with Paul Sweeney.
We got a lot of green on the screen here, but the volume is light. This is a market that's much more optimistic or bullish than maybe central bankers are. 9.5 million job openings. What are people doing? Are they just sitting in Starbucks all day?
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
What are you guys thinking about hardware, software? How should investors approach this thing called AI?
This is Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we started off strong. Michael Nathanson, founding partner and senior research analyst at MoffettNathanson, one of the top voices on the media space on the street. We got him. We want to talk about the media. The moguls are out there in Sun Valley. Why I didn't get the invite, I don't know. We're also going to check in with Ken Shea, senior analyst with Bloomberg Intelligence. He covers beverages, tobacco, and weed. We're going to get a Pepsi had some decent numbers out there. How about that? Pepsi, Frito-Lay. So we'll talk about all that consumer product stuff. Right now, let's kick it off with Charlie Pellet and get a Bloomberg Business Flash.
Hi, thank you very much, Paul Sweeney. We are at the best level of the year right now for the S&P 500 index. You pull up SPX, run the GP function on the Bloomberg. We're looking at a 17.1 year-to-date gain on the S&P. Right now, very close to session highs, just off it. The S&P right now at 44.98. We're up 26 points, a gain now of just about 0.6%. Tech giants leading today's gains. The Dow up 46, a gain there of 0.1%. NASDAQ Composite Index up 158 points. That is an advance right now of 1.1%. Year to date, by the way, NASDAQ now up by 34.5%. To put that in context, the NASDAQ 100 index up by 41.6%. 10-year yield, 3.78%. We've got the 2-year yielding 4.63%. Spot gold down $2 the ounce to $19.95, drop now of 0.1%. And West Texas Intermediate crude up 0.3%, $76 a barrel. Paul mentioned PepsiCo and earnings. That stock up now by 1.3%. Coca-Cola reports on the 26th up by 0.6% this morning. We also heard from Delta. Its profit is soaring as a rebound in international travel promises to keep planes packed throughout the crucial summer season and beyond. Delta Airlines shares up 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
God bless you. Charlie Pellet, thank you so much. We appreciate Madison Mills sneezing. Paul Sweeney here in a Bloomberg Interactive Broker Studio. And of course, we be streaming on that thing called YouTube. Just go to YouTube and search Bloomberg Global News, and that's you get the video feed there. All right, the absolute top media analyst on Wall Street, in my opinion, and it's an informed opinion, Michael Nathanson, founding partner and senior research analyst at MoffettNathanson, joins us via Zoom. Michael, thanks so much for taking the time. I got to start with Disney. You know, back in the day, I told a professor buddy of mine in Harvard Business School, I got a case study for you, how to really do an effective succession planning, and that was Bob Iger, the Walt Disney Company. I'm thinking the Tom Staggs, Jay Russolo set up that nice race. We thought everybody on the street was happy with it. We thought, boy, these are two good people. And then it didn't work out, and Bob kept extending, and all the executives left, and here we are again. So what do you make of what's going on at Disney?
Yeah, thanks, Paul, for your nice comments. That really means a lot, so thank you for that.
You bet.
There's a lot to unpack here, right? So start with where you began, which is, believe it or not, there's not a bench here that's ready to take over leadership. I think part of it's that the company is in such different businesses and different life cycles, right? So Parks, the guys you mentioned, Staggs and Rizzullo, Staggs was CFO, Rizzullo was the head of Parks. Parks has a different type of business model than media, and now streaming is their big bet, and streaming is a completely different business model. So it's such a broad set of assets, and you need someone who has got creative sensibilities or trustworthiness. It's a hard job. But to your first point, yeah, it's kind of amazing that this late into it, there hasn't been a bench of emerging candidates besides Bob Chapek, who in hindsight was the wrong person, and we thought that almost right away. So that continues, right? The hunt for the next executive continues. We've got more time on his hands, but that's just part of the story, I think.
And so, Michael, the bigger issue, well, not the bigger issue, but the operating issue for Bob Iger and the management team is Boy, how do you manage this transition from the traditional business where you had cable companies and satellite companies, giving you steady profits, to now the streaming business where the economics are really uncertain? Let's start with ESPN. What would you recommend to Bob Iger and the board that they do with ESPN?
Yeah, so Paul, start with ESPN, and it's right. When you covered the stock way back when, it was a driver of free cash flow, a driver of profitability. ESPN, and you'll laugh, ESPN to us it's really unclear how ESPN could work on a standalone basis as a direct consumer service, right? The price point has to be quite high. Churn will be more seasonal than it is now. We think the best idea is to either create a sports-only bundle with other sports-led programmers, or put sport into the Disney Plus Hulu bundle, right? So you either have to go all in on sports or use sports strategically. It's unclear at this point what Disney wants to do. I think they really want to maintain the ESPN brand as a standalone app, we think. But even today when Bob was talking about it, it's unclear what the path looks like going forward. We've studied ESPN for a long time. We used to be more sanguine about the future of ESPN, but cord cutting has gotten so bad, and the cost of sports keeps rising, that it's not an easy, clear answer that for your question. Our best bet is to try to keep the bundle alive by shrinking it down to sports only. When I say the bundle, what remains the pay TV bundle. So shrink it down to sports only.
So when you talk to institutional investors, Michael, just about the big media companies, how confident are you that they can make this transition, broadly speaking, the industry, to a streaming economic model? Because if I'm an investor, I'm like, I just don't know, and as a result, I'm not going to invest.
Yeah, for people, so if you read our work, we had a note out today where my partner Robert Fishman, who covers a lot of media names, equated today's linear TV to radio.
And that hurt me.
Exactly. And it feels like that, right, Paul?
Yeah, it does.
Where the uncertainty index is so high for the future, and the pivot here seems so complicated that we're finding just a lack of interest, even for Disney, right? So we upgraded Disney when Bob came back at $90. Stock went to 120. So our price target's back to 90 again. But even Disney has lost kind of the goodwill of the institutional investors that are out there, right? So there's just a lack of interest here, like radio, which is a sad commentary. But a lot of this, Paul, I've talked to you over the many years, has been self-inflicted, right? Didn't have to be this bad. They licensed their content to Netflix. They then all pivoted hard to streaming without much thought about profitability, and they killed the golden goose, right? It's really sad. Like, there'll be a textbook written about how this was, a lot of this was self-inflicted in terms of the wounds in this industry.
I think in your next life you can write that book in your spare time, Michael. Hey, let's talk about a name that just jumps out at a lot of investors, maybe is of some interest, Paramount. What does this company do? What does Sherry Redstone really want to do with this company? Because we kind of thought that they didn't have this scale before. Nothing's changed. Maybe even it's become more pronounced, that risk.
No, so we and Robert have a sell on Paramount. You may be shocked to know or not know that they generate no free cash flow, and they're highly levered. And the bull case is simply that someone is going to buy them.
Yeah.
Warren Buffett's an investor. And that to us is if that's all you have as a bull case, then we're worried about it. We think just they're over leveraged through cable networks, the lack of profitability in streaming. It's just a tough hand they have. And I think, they just got the dividend last quarter. And I think if you move to this arms dealer idea where you just start selling your content, I'm not sure there's a there at the end of the day. Eventually, you see Netflix, Amazon, Apple make their own content. So maybe they'll buy the Mission Impossible. Maybe they'll buy, the Top Guns from you. But they won't license all your content because they don't have to anymore. So I think you pick that one. That's a tough hand, Paul. We're quite negative on the outcome there.
Hey, Michael, this is Madison. A question about this, and it's funny, I was talking to my friends last night who all really hate the Paramount app, so not a great sign for them. But when you look at a Netflix in particular, they've really gone all in on creating this really cheap reality TV content that can air for them and does really, really well. Disney doesn't really have an option for that necessarily? Do you see Disney going into a cheaper content creation strategy in order to compete with the likes of Netflix?
It's funny, we've studied that question by looking at Netflix. Netflix's viewership, about 8 to 10% of their viewership would be unscripted reality every month, every quarter, 8 to 10%. It's not a big number, but to your point, the stuff they have probably outpunches, what the costs are making it. Disney has national, so Disney Plus has Nat Geo, Hulu has The Bachelor. Our vision is that at some point Disney Plus and Hulu get combined. Nat Geo really hasn't sparked, it looks like, the same level of engagement that Netflix's reality shows have. But we think that at some point when they combine Disney Plus and Hulu, to your comment, they have to lean more into unscripted reality. Again, The Bachelor is made by Warner's, but it's not anything. It's a good observation. On the opposite side, Warner Brothers, which has now Max, has great HBO stuff, and now all the Discovery content. They probably have almost too much reality programming there. So I think Netflix has figured out the perfect blend. I think to your point, others will have to follow that blend.
And if there isn't enough headwinds for just strategically for the industry, now they've got potentially a pair of strikes, one from the writers and now potentially one from the actors. Boy, how big of a problem is this for the industry, Michael? Do you think these things get resolved?
I think it's a huge problem. I think it's happening at a time of great difficulties for the industry, a ton of structural change. The directors have settled, the writers have not, and the actors likely will go on strike. I think it's going to be really damaging. And the problem, I think, is that the sides are so far apart, given that the writers are still on strike. And the economics of the industry, as we've just talked about, are really, really challenging. So I think there needs to be some realization that there needs to be common ground here, something that has to give. I worry that this goes on through the summer is going to really affect the fourth quarter and all the new programming for broadcast. And some of the broadcast networks that we cover will be in a really bad position. And it's also going to hurt streaming companies that are looking for new, fresh content by the first half of next year. But it has real implications here. And but it doesn't seem to us to be settling anytime soon. In fact, it feels like it could drag on, Paul, which is not a good outcome for anybody.
Hey, Michael, just lastly, love to just get your top pick here. What are you guys in your team kind of out there with your clients?
Okay. So in media, I'll separate media and internet, right? So we keep adding coverage. So Robert's Media World, our top picks would be Fox, because Fox is just sports and news, and Disney for a long-term view, that $90 a share. If Bob Iger can be successful, we think there's $30 of upside. So Disney, Fox, top pick. Here we have Paramount as a short. In internet, we keep pushing Meta, which has been a really nice year for us, and Alphabet, because we think the AI fears of ChatGPT killing Google search are overstated. So, we stay with those behemoths, and, that's been an easy call. And we think that there's this real dispersion of digital advertising is going to put up really nice growth, and linear networks is going to have a really hard time growing, Paul. A la radio back when you and I were young, we were younger men at that point.
That's right, exactly. All right, Michael, thanks for giving us a couple minutes of your time. I really appreciate it. Michael Nathanson, again, one of the top analysts covering the media space, or just in Wall Street in general. Founding partner and senior research analyst at MoffettNathanson. Looking at this market here, we've got the S&P 500 staging a nice rally, up about 0.6%. The Dow a little bit less, up about 0.2%. NASDAQ is where the action is, up about 1.2%. Even if you sparse it, or kind of parse it a little bit more, the NASDAQ 100 up 1.25%. Yields, they've come in. 2-year Treasury is in 13 basis points, looking at just about 4.61%, and the 10-year down 8 basis points, 3.77%. So the yield curve becoming, I guess, less inverted, I guess, or uninverted. I forget what they say out there. All right, we had some earnings today. Pepsi. I'm a Coke guy, but I'm just as happy drinking Pepsi. I'll be honest with you. I have no real loyalty. Ken Shea, he does this stuff for a living. He follows all these consumer companies. He's a senior equity analyst at Bloomberg Intelligence. Ken, thanks so much for joining us here on Zoom. What did you learn from Pepsi today?
Yeah, hi, Paul. Well, we learned again the power of Pepsi's brands. I think everyone respects their brands and their ability to pass on price increases. But I think there may have been some underlying skepticism that it could continue for so long, and it has. And the second half of the year, the company is mentioning that commodity costs may ease a little bit. It may not be as aggressive with pricing. I think that's giving people a little relief. Pricing's been in double digit for a while now with this company, but they're investing in the brands. So what we learned is that the company has really powerful brands. They're not afraid to invest in them and price accordingly.
And to what extent do you see that pricing power continuing through the second half of the year? Because in the last earnings cycle, they were sort of like bragging about their ability to increase prices. Is that going to keep happening?
That's the $1 million question. I'd be reluctant to bet against them, though. This earnings report was their 18th beat in a row. They have an ability better than their peers to manage their volume and pricing such that revenues keep coming in strong. They invest quite a bit. Their CapEx is a little bit higher than their peers, but they invest in a manufacturer. They own their bottlers, too. They invest in productivity. It's really showing in the bottom line. So if they can continue that top line strength and can continue to what they're doing in the second half, then we're looking at another high single digit kind of EPS gain in the second half.
Hey, Ken, is there still any vestiges left of the old cola war of years gone past? Do they still fight for market share, Coke and Pepsi, or is it kind of fizzled out, for lack of a better word?
Well, they don't speak about it that much, PepsiCo, market share, because they really are a full, sweet portfolio beverage company, whether it's the Gatorade sports drinks, or now they're investing heavily in energy drinks, the juices still, the teas, now alcoholic beverage, have a venture with Boston Beer. It's small, but they don't get caught up too much in the carbonate cola aisle share, like Coca-Cola is much more concentrated in as much.
All right, we've got like 20 seconds left with you here, but in those final 20 seconds, I did want to ask you about the downside of the dollar. Do you think Pepsi's incredibly excited about that, or am I overblowing that a little bit?
No, you're not. I mean, it's been currency's been a drag for the last year, two or so. They're still seeing a modest drag in the second half. They may be a little conservative given the dollar weakness of late, and we think there's still going to be a slight drag, but we think it's a good thing for them. All else being equal, less drag the better.
All right, Ken, thanks so much for joining us. Ken Shea, Senior Equity Analyst. He covers all the consumer products companies, a lot of the beverage companies, the tobacco companies, the weed companies. So he's got the whole portfolio there, and we appreciate getting a few minutes of his time there. Pepsi, some good numbers today. This is Bloomberg. All right, let's get some company news right now with Steve Rappaport.
Well, ExxonMobil agrees to buy Denbury for $4.9 billion. That deal provides the oil giant the largest network of CO2 pipelines in the country. The companies say the all-stock transaction will value Texas-based Denbury at $89.45 a share. The acquisition is the largest single carbon management investment since the Inflation Reduction Act passed in August. Shares of Exxon now down more than 2%. Automakers and union officials are in Detroit for contract negotiations that kicked off with a less than pleasant introduction. More on that from Bloomberg's Gina Cervetti.
Steve, the gathering began with a symbolic snub when UAW President Shawn Fain broke decades of tradition by refusing to shake hands with reps from each of the big three car companies. Fain is looking to protect jobs as Ford, GM, and Stellantis increase transitioning to electric vehicles. EVs require fewer parts than cars and trucks with combustion engines. The UAW wants to win back the cost of living increases that workers lost when the Great Recession bankrupted GM and Chrysler. The union also seeks to end the two-tier structure that pays less wages and benefits to employees in their first 8 years. Steve?
Thanks, Gina. And shares of PepsiCo are up more than 1.5% after its sales and earnings topped estimates once again following a strong quarter. And that suggests consumers are still willing to pay higher prices for the company's beverages and snacks. Organic revenue will probably grow 10% this year after a 13% gain last quarter that exceeded analyst estimates. And those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long at Bloomberg. We've got the Dow, the S&P, NASDAQ, and the NASDAQ 100 index all pushing higher right now, with the S&P up 26. That is a gain of 0.6% at 44.98 on the S&P. Wall Street getting an extra dose of encouragement to bid up stocks after another inflation report reinforced bets that the Federal Reserve is approaching an interest rate peak. 10-year yield, 3.76%, with the 2-year yielding 4.61%. Gold up $1.77 the ounce to $19.59, higher now by about 0.1%. And West Texas Intermediate crude oil up 0.1%, $75.84 for a barrel of WTI. Bottom line here, the Dow, the S&P, and NASDAQ all advancing. What about the market backdrop? Michael Cugino is portfolio manager at the Permanent Portfolio Family of Funds, and he was a guest right here on Bloomberg Markets.
On the bond side, you got an inverted yield curve. It's looking more, bond investors look like they're expecting a recession at some point. Equity investors, equities are bleeding up despite declining earnings and despite, some other indications of maybe tightening financial conditions. Both can't be right over the long term, but in the short term, we have a bifurcated market.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Again, recapping here, stocks are higher. S&P up 26, a gain there of 0.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pell, thank you so much. We appreciate that. Madison Mills, Paul Sweeney here in our Bloomberg Interactive Broker Studio. A little bit of an M&A trade here today. Exxon to buy Denbury for $4.9 billion in CO2 pipeline push. Let's get the latest on this transaction. Kevin Crowley joins us, senior U.S. oil reporter for Bloomberg News. Kevin, are you in Houston?
That's right. Yep, I'm in Houston. Yeah, where Exxon has just relocated.
Okay? How hot is it going to be in Houston today?
I think we're going to be at 100, but it feels like it's more like 110 or so. So we're staying firmly inside in the air conditioning.
And judging by your accent, you're not a Houston native. I mean, you're genetically, you're not made up for this weather, are you?
That's right. Once it gets to about 80, I start to melt.
All right, well, hang on. All right, hang out in your air conditioning there. Talk to us about this Exxon deal. What is Denbury, and why is Exxon shelling out $4.9 billion?
So it's a really interesting deal. It's really a low carbon play for Exxon. Denbury is what's called an enhanced oil recovery specialist. So they use carbon dioxide in old wells in order to produce more oil. Now they have a key asset here, which is a 1,300-mile pipeline network, which is the largest carbon dioxide pipeline network in the U.S. And Exxon really wants this pipeline network in order to boost its carbon capture business. It's a really unique asset that Exxon saw as critical to its whole low carbon strategy, and that's why it's really paying this $5 billion for
what is a carbon dioxide pipeline? What is it? Transfers carbon dioxide, but from where to where and for what reason? I don't understand.
That's right. It transports carbon dioxide. So Denbury used to use carbon dioxide to push into old oil wells in order to extract crude. This is a very mature business. It's a very reliable business, but it's a very high cost business. And actually, Denbury went bankrupt in 2020, and so has been on the recovery track for the last three years. Now, with the world's focus now on carbon emissions and particularly the passing of the Inflation Reduction Act, these pipelines that move carbon dioxide are now being repurposed for carbon capture. So Exxon's plan here is to capture carbon emissions along the Gulf Coast, which is full of refineries, chemical plants, some of the biggest concentration of industrial emissions in the country. They want to capture those carbon emissions, move them along the Denbury pipelines, and then bury them in the ground.
Really? You bury carbon dioxide?
That's right. That's right. It's called carbon capture and sequestration. It's the sequestration part of it, which is where the magic happens, really. Whereas so instead of emitting carbon dioxide into the air, you can capture it and you can bury it underground where they say it will stay forever. So it's a way of being able to keep a refinery or chemical plant going, but without the emissions.
Okay, so you mentioned the Inflation Reduction Act. How much of this acquisition is directly related to that legislation?
Yes, it's absolutely critical. So I spoke to the Exxon executive kind of leading this morning, Dan Aman, who used to be at General Motors. He said the Inflation Reduction Act was a key catalyst, and without the Inflation Reduction Act, I think this deal would have been a bit more challenged. And what the Inflation Reduction Act does really is it provides tax credits for this whole process I talked about, capturing carbon and then burying it. Exxon can do this. Exxon want to do this on a really large scale, and those tax credits will be really critical for Exxon to really justify it to their shareholders as to why they're doing it and to ultimately make profits from this process.
Kevin, kind of help us understand the differences, to the extent there are differences, between how maybe some European energy companies like British Petroleum or Total view the transition to clean energy versus American energy companies like an ExxonMobil. What are the differences in how they're pursuing it, how they view it?
Right. So there was a key split really around sort of 4 to 5 years ago, where the European majors, particularly BP, Shell, Total to a lesser extent, decided that they were going to go hard into renewable energy. They were not going to be oil and gas companies anymore. They were going to be energy companies, and they were going to really focus on things like wind, things like solar, become big in power generation. Whereas the US oil majors were were much slower to embrace net zero targets and things like that, and they've decided to really stick much more closely to oil and gas, and their low carbon strategies were much more about things that they were specifically good at. And Exxon sees carbon capture as one of those things, which it has unique capability in it. Now, what's interesting now is we've seen this year in particular, the European majors have somewhat sort of pivoted their strategy to come much more closely towards the US players, because they found that investing in renewables was very, very competitive, and that the returns were really not as good. As in, there are plenty of people who can do wind, there are plenty of people who can do solar, there are plenty of existing power utilities all across the world, and BP and Shell really found that competing with those large established players and specialists in those areas was not really a very high return business model. So they've decided to pivot a bit more back to oil and gas and focus on the low carbon areas where they can add some unique value. That's certainly Exxon's strategy.
It sounds like a critical part of Exxon's future-proofing strategy as well. But I'm curious then, why are we seeing a little bit of negativity when it comes to the day's trade on the news? The stock is down by just over 2% at the moment.
Well, yeah, they're paying all in stock, so they're paying $5 billion in stock. So that's dilutive for the shares. So I think that's probably the technical reasons why Exxon is trading down today. Now, Exxon's been buying back an enormous amount of stock over the next sort of 18 months. They had a record profits last year, so they've been buying back a lot of stock. So this obviously dilutes that mechanism. So that's why Exxon is trading down today. What's interesting is Denbury is trading down. Now, normally the acquired company would trade up, and some commentary in the markets that some analysts think this is Exxon is paying kind of a too low a price for Denbury. So that's certainly an interesting one to watch.
All right, so Kevin, you're an Englishman in Houston, but in Houston, it's energy is business and job one. It's business number one. I got WTI crude oil just under $76 a barrel here, a little bit of a rally. What are they, when you go to the local pub equivalent in Houston, what are the folks talking about in terms of where they think oil's going in terms of the price?
Everyone thinks it's going up. It's an oil town. It's always going up. We think it's going to the moon. $100 a barrel. It's just a matter of time. So yeah, people very bullish as usual. And I think you kind of have to be in the oil business. It's a tough business. Lots of booms and busts. So it's certainly the place for optimists.
How about nat gas? I mean, natural gas has been a different story. What's the feeling about that?
Yeah, well, nat gas is we've basically got too much of it. There's huge amounts of gas comes out of the Permian Basin, which is primarily an oil basin. So natural gas is is essentially a byproduct. So really, people are really waiting for the liquefied natural gas export facilities along the Gulf Coast to come online. We had a huge project sanctioned just last night, actually, in Brownsville, South Texas. $18.4 billion project, massive. So that's gonna swallow up some of this excess gas and export it around the world. There's been 3 other final investment decisions made, 2 other final investment decisions made on similar facilities this year alone. And really, the whole goal of this is to get sort of U.S. gas on the water around the world, helping to replace Russian supplies, especially to Europe.
All right, great reporting as always. Kevin Crowley, senior U.S. oil reporter for Bloomberg News, again, an Englishman in Houston. Good luck with that. Before that, he was in Johannesburg, and then before that in London. So he's been all over the place for Bloomberg News. Appreciate getting his perspective there. Right now, let's head down to Washington, D.C. Nathan Hager's got World and National News.
And some breaking news for you, Paul, from New York State. The congressional map could be in for an overhaul. A state appeals court has ordered a bipartisan commission to restart a process that would give the Democratic-controlled state legislature in Albany final say over New York's 26 U.S. House districts for the rest of this decade. The current lines were drawn by a neutral court-appointed expert last spring. Under those new lines, Republicans flipped 4 seats on their way to a new majority in the House. The New York Times reports the GOP is now vowing to appeal this ruling to New York's highest court. President Biden says war with Ukraine has left Russia weaker. He is wrapping up a 5-day tour of Europe with a stop at NATO's newest member state, Finland.
Putin's already lost the war. Putin has a real problem. How does he move from here? What does he do?
Speaking at a joint news conference with Finland's president, Biden said Putin could eventually decide it's not in Russia's economic or political interest to continue the war. President Biden also suggested the leader of the Wagner Group, Yevgeny Prigozhin, could be in danger after his mutiny attempt on the way to Moscow last month. In the president's words, if he were Prigozhin, quote, "I'd be careful what I ate." A federal jury in Pittsburgh has found Robert Bowers eligible for the death penalty. Bowers is the truck driver who stormed into the Tree of Life synagogue with an AR-15 in late 2018 and killed 11 worshipers in the deadliest anti-Semitic attack in U.S. history. This ruling sets the stage for more evidence and testimony in the penalty phase. Birth control will soon be available without a prescription. Food and Drug Administration has approved Perrigo's O-Pill for over-the-counter sales. Kelly Blanchard is president of IBIS Health, which advocated for this move.
This means we will have a more effective, a highly effective, very popular birth control method available directly from pharmacies over the counter without all those barriers from the prescription requirement.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all advancing. S&P holding very close to session highs. Right now, the S&P's up 28 points, just above 4,500, 4500.86 right now. That is a gain of 0.6%. We've got the Dow up 78, a gain there of 0.2%. NASDAQ up 175, higher now by 1.3%. The NASDAQ 100 index now trading at its highest level since January of 2022. S&P at the best level so far this year. 10-year yield, 3.77%, with the 2-year that's yielding 4.62%. Gold up 1.2%, $19.58 the ounce, a gain there of about 0.1%. And West Texas Intermediate crude oil, $75.95 a barrel, higher now by about 0.3%. There's a new round of inflation data. The Producer Price Index posted the smallest year-over-year increase in 3 years, rising just 0.1% in June. Reaction to this morning's data from Jennifer Lee, senior economist at BMO Nesbitt Burns, who is a guest right here on Bloomberg Markets.
Finally, all of these Fed rate hikes are making an impact on inflation, bringing it down to that, what I used to think was the elusive 2% target is finally starting to happen, back down to a 2-year low for the headline PPI we saw this morning.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. We were just talking about PepsiCo with our Ken Shea. PepsiCo shares, they're up now by 1.6%. It has raised its sales and earnings estimates once again. Also out with earnings this morning, Delta Airlines. Its profit is soaring as a rebound in international travel promises to keep planes packed through the crucial summer season and beyond. Among airline shares, we do have Delta higher, up now by about 1.5%. So again, recapping, stocks are advancing again today with the S&P right at 4,500, up 27 now, a gain of 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Madison Mills, Paul Sweeney here in the Bloomberg Interactive Broker Studio, streaming live on YouTube. Just go to YouTube and search Bloomberg Global News, and that's where you'll find us. Charlie Pellet was just talking about Delta Airlines reported some better than expected numbers. Stock up 1.5% today, up 48% year to date. That's a 52-week high. So a nice rebound there for Delta and some of the other names. So let's get to the bottom of it. What's going on here with this airline business? None better than George Ferguson, senior aerospace, defense, and airline analyst for Bloomberg Intelligence. Also a retired U.S. Army officer, so we thank Captain for his service. Hey, George, talk to us about Delta here. I mean, the airports are crazy. The planes are packed. Who's flying? Is it just people pent up? I'm getting out there going. I'm just going to go pent up demand. Is it business? Who's flying out there?
So it's largely leisure right now. And so I think that's the big question for the industry is, will business feather in after this summer season is over? But these strong earnings are being driven by, very intense leisure travel activity, especially into Europe. We're starting to see it ease a little bit domestically. And we'll have to see when we get to Q4 if business can come in and do their part.
Well, that's probably the million-dollar question, I guess. But I just wonder what the biggest headwind is for these airlines as this consumer demand just continues to stick around. I mean, didn't airlines have like the highest traffic day in history at the end of June? Like, it's not budging.
Yeah, I mean, we are moving to levels that are well above 2019 capacity. So it doesn't surprise me when we hear about one of these record days. But I do think the biggest risk is a holdup in demand. We are concerned about the consumer too. If as we get into the fall, the Fed hikes have an effect on consumer demand, that could be bad for the airlines. Another big tailwind has been fuel. That's definitely working in their favor right now. We could have a reversal in fuel, especially if global economies bounce back, and they might need to raise rates from here. to try to keep this level of profitability. That's another potential risk for the airlines. But right now, I think they pretty much have some pretty nice earnings baked in for Q2 and Q3, especially the big full-service carriers based on this really strong international demand right now and good domestic demand.
All right, George, here's the Paul Sweeney air flight strategy at the moment. I'm only flying when somebody pays me to fly, okay? Because this is what typically happens for me. I land in lovely Newark Airport. If it's within an hour, I'm like, all right, that's on time for me. We land, but then we sit there on the tarmac looking at IKEA and the New Jersey, Turnpike, an hour until they find some dude to either tow us in or open the gate or get the bags. Where are we on the labor front for these airlines? And that includes pilots, too. I mean, pilots, where are we on the labor front?
So I think the pilots are going to be a more protracted issue. The airlines, I think, have come pretty far down the road to hire almost all the people they need to run operations. I think the challenge you're getting at Newark, it's a couple-fold. One of it is they've got to train those employees to become more efficient. But second, Newark is such a busy airport that the minute there are any delays, there's problems with gates and timing, and you're going to get stuck on the tarmac for a little bit. The other challenge, though, longer-term challenge, is the pilot issue. I think they've got most of their backfill done, and they've got a lot of the training done to get pilots into their force. But they're going to continue to have a large level of retirements year over year, I think, through most of this decade. So they're going to have to make sure that those pipelines are full of pilots coming into their companies, getting trained and getting into the cockpit. I'm not even sure that the U.S. economy has enough pilots coming into the business to support it. So they may need to find a way to promote the industry, get more people to want to be in the cockpit for a living.
Is the labor problem something that we are hearing executives from Delta continue to talk about on these earnings calls? It does feel like there's been a drop-off in that conversation.
There has been. And again, I think for right now, they've got most of the hiring done. Now it's a function of training. But again, I don't expect, especially the pilot issue, to go away over the next number of years. So I think that'll continue to be a challenge.
George, what are the airlines that you follow? What are they telling you about the Chinese traveler? Because I learned just recently that just because you've opened up your borders, it doesn't mean they're going to allow planes to come in or out. And therefore, that's keeping a cap on Chinese tourists coming to New York City, for example. Where are we on that?
Yeah, so I from our colleagues in Asia, I still hear that one of the big drivers of demand, of Chinese travelers, Asian travelers coming to the U.S. and to Europe are these group sort of travel companies, and they haven't sort of returned to Europe and the U.S. as much as they had pre-pandemic, so that affects things. Plus, I think the requirements to get out of China and back into China, they aren't fully removed, and that's going to slow down some of the folks traveling from there. What we've seen too in schedules is that China and Japan, neither of them have returned to 2019 levels of capacity flying in and out. They're still 20, 30% down as far as the number of seats in and out of markets are concerned. And so, that's still a bit of a drag on international operations for the big full-service carriers. I expect that'll continue to improve as we get into next year, and that could be a little bit of a tailwind for the companies.
Well, in our final kind of 30 seconds here, what is the biggest tailwind that we need to see happen with Delta in the second half of this year for them to continue the earnings momentum that we've seen them already have in the first half?
So like I said, I think Q3 is in pretty good shape. In Q4, I think they'll need some more business travel, a lot more business travel to help support strong profits.
All right, George, thanks as always. Thanks for joining us. George Ferguson is our go-to guy on the airlines and the people who make the planes, the aerospace stuff, the defense stuff. He's all that kind of big planes and equipment kind of guy. George Ferguson, Senior Aerospace, Defense, and Airline Analyst for Bloomberg Intelligence from the comfy confines of the Princeton, New Jersey campus of Bloomberg Intelligence. All right, looking at these markets right here, S&P 500 up 0.6%. NASDAQ leading the way, almost double that at 1.23%. How about that? The Russell also getting a little bit of a lift, up 0.8%. All right, we're going to be back in just a moment. This is Bloomberg. All right, let's get some company news right now with Steve Rappaport.
Picking up with what we just talked about here, you know that with the pandemic in the rearview mirror for many, there has been a hankering for travel, and Delta Airlines showed just how strong that demand is, with profits soaring in this quarter to a record $1.8 billion. Summer vacationers packing planes, especially to international destinations. The results released today beat Wall Street expectations, and Delta raised its forecast of full-year earnings. Delta officials said strong demand for tickets has continued at the beginning of the July through September quarter, when it expects revenue similar to a record second quarter. Hollywood is bracing for a shutdown, and it could come at any moment as actors say contract talks with the studios have collapsed. More from Bloomberg's Joan Doniger.
Steve, if actors join Hollywood writers in going off script, it would be the first simultaneous strikes for the industry in more than 60 years. Negotiators for SAG-AFTRA and the major studios said they would bring in a federal mediator to help resolve the dispute, but the parties did not reach an agreement before the midnight deadline for a new contract. Residuals from streaming platforms are a big sticking point. Performers want a significant boost in payments to reflect the success of shows. Studios argue many of those platforms have yet to be profitable.
Thanks,
Steve?
Joan. The Federal Trade Commission opened an investigation into OpenAI and the company's ChatGPT chatbot to determine if the Microsoft-backed startup violated consumer protection laws. This marks the first regulatory challenge to the emerging generative AI market. The FTC is examining whether ChatGPT provided false information about individuals and whether it has leaked personal data. And those are the company stories we're following this hour. I'm Steve Rappaport.
You're listening to Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, Madison Mills and Paul Sweeney here on the Bloomberg Interactive Brokers Studio, looking at these markets. Pretty darn good. Up 0.6% on the S&P 500, NASDAQ up 1.3%. I'm following Bitcoin. It's finding a nice bid out there, up 1.6%, 480 points. 30,800 on the Bitcoin. Hopefully Tom Keene's not listening because he's not. He would call it something else than Bitcoin. Right now, let's head to right across the room, across behind the wall, news wall, to Dan Schwartzman for Bloomberg Business News.
Hey, Paul and Madison. President Biden wrapping up his week-long European tour with a visit to Finland to meet with Nordic leaders, as well as welcoming Finland into NATO as its 31st member. Biden says Finland is a great ally to the U.S.
I said to our friend in the East that he wants the Finlandization of NATO. He's going to get the NATOization of Finland. And, but all kidding aside, you've been a great partner, you're great allies, and, Finland and the United States, I think, are stronger together, and I really mean that.
The president, while speaking alongside Finland's President Sauli Niinistö, says that Russia has already lost the war in Ukraine as the country faces economic trouble and dwindling resources. Biden heads back to Washington tonight after his stops in London, Vilnius, and Helsinki. The gunman who killed 11 people at a Pittsburgh synagogue back in 2018 is eligible for the death penalty. Bloomberg's Nathan Hager reporting from Washington.
That ruling from the federal jury sets the stage for more evidence and testimony in the penalty phase against Robert Bowers in the Tree of Life synagogue shooting. It is the deadliest anti-Semitic attack in U.S. history. Jurors sided with the prosecutors, who say Bowers planned the attack for months and has only expressed regret for not killing more people. Bowers' attorneys say he was delusional and his life should be spared. In Washington, I'm Nathan Hager, Bloomberg Radio.
Thanks, Nathan. Unionized Hollywood and TV actors could begin striking literally at any moment after contract talks ended without a deal. The union, which is SAG-AFTRA, which represents 160,000 actors, said early this morning that talks with Hollywood studios over a new contract had collapsed, the negotiating board then voting to recommend a strike. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Dan Schwartzman, and this is Bloomberg. Back to you, Madison and Paul.
All right, Dan Schwartzman, thank you so much. We appreciate it. Interesting story, Madison, you identified. Ultra-rich are betting the next big American sport is cricket.
Cricket. You know I love a sports story, so I just thought I'd throw this one out.
Yeah, so we've got some big names. I mean, Anurag Jain, he is part of the firm Perot Jain, which is Ross Perot Jr. Yeah. So he got some big money behind it. He loves cricket his entire life, but after learning how much players made, he ditched his dream of making a career of it and ultimately went into business. But now he and Ross Perot Jr. are financing a U.S.-based, league for cricket.
Yeah, it's interesting. Bloomberg reporting in May that Tiger Global Management is in advanced talks to buy a stake in one of these companies for $40 million, and they value the team of that company at $650 million. This is a cricket team, I guess. What do you call it? Should I call it a team?
I think
league?
so. Yeah.
A league?
I
don't know. Yeah, I got to get more read in on my cricket language here.
So a lot of U.S. Indian American CEOs like Microsoft's Satya Nadella, the CEO of Adobe, they're investing alongside this too, because I think they recognize that this world's second biggest sport doesn't really have a major place in terms of a professional league in the United States.
Right.
Let's change that. So it's a little bit similar to kind of what we're seeing in Formula One racing. Hasn't really had a big position in the U.S. Formula One was bought by Liberty Media, John Malone's Liberty Media, several years ago, and one of their goals for growth was to make it bigger sport in the U.S. So they had the Miami Grand Prix, for example. So just some of these non-core sports trying to get a bigger position within the U.S.
Yeah, it feels like there's the Formula One and cricket bucket of things, and then there's the pickleball bucket.
Oh boy!
And that one feels like more of a consumer play. Like I see that becoming a Top Golf, and these becoming sports that we watch on TV and things like that.
Yep. So we'll take the business of sports. Bloomberg's all over that stuff. So it's good stuff. So interesting. Cricket. I've been to one match in my life. I thought it was kind of interesting. It's akin to baseball, maybe. I don't know. All right, we're going to have Sound On, Joe Matthews, starting right now.
this morning brought the word disinflation back to our vocabulary. That's good news if you don't want the Fed to hike too much. The 10-year yield right now coming down about 10 basis points, 3.76, and the 2-year yield is coming down even more. Obviously, the shorter end of the curve is more sensitive to Fed expectations. The Bloomberg Dollar Index is down right now, just about 0.5%, but it's the 5th consecutive day of declines for the dollar index at 1201.84. The greenback losing ground against the euro and the yen today. And then finally, oil gaining yet again. It has actually been up and down today, but right now it's up 19 cents. NYMEX crude trading for $75.94 a barrel. So a lot of action going on in asset prices today. Meanwhile, today, the former CEO of the crypto network Celsius was arrested for fraud, accused by prosecutors of orchestrating a years-long scheme to mislead customers and to manipulate crypto prices. Here's the Southern District of New York attorney, Damian Williams.
Today, I'm announcing the unsealing of an indictment charging Celsius's founder and CEO, Alex Mashinsky, with orchestrating a scheme to defraud customers of Celsius through a series of false claims about the fundamental safety and security of the Celsius platform, and for participating in a scheme with Celsius's chief revenue officer, Ronnie Cohen-Pavone, to inflate the price of Celsius's proprietary token, CEL.
Allison Versprill broke the news and joins me now. So, Allison, what do we know about this case and the fact that Mashinsky seems to have disagreed with a deal that the company Celsius is going along with?
Yeah, so right now there are a couple things happening. We have the criminal charges that you just saw that Damian Williams was talking about. We also have, civil allegations brought by the Securities and Exchange Commission, the Commodities Futures Trading Commission, and the Federal Trade Commission. In addition, really the allegations are centered on the fact that Mashinsky, allegedly lied to investors and customers, that he made misleading statements, knowing full well that they were inaccurate. At one point they say that he had a live streamed video series and staff would have to go back and kind of edit the video series because they knew that those statements were misleading. So that's really at the core of what we're talking about here, in addition to those manipulation charges for the Celsius crypto token.
Is the fine line publicity stunt by prosecutors? I mean, a $4.7 billion fine, first of all, is unbelievably high, and second of all, obviously isn't going to get paid. Why even bother?
I think, some of this is definitely probably sending a message, right, that you can't be doing these types of, you can't be, taking these types of actions against customers. And we did note that the $4.7 billion fine was actually from the Federal Trade Commission. And they did say that, they were going to suspend that temporarily so that creditors could continue trying to get their money back from Celsius in the bankruptcy proceedings. So we'll see where all of this goes. But, it's definitely sending a message to the rest of the industry.
Allison, what does this mean for the rest of the industry? How does the broader crypto industry look at this case? Was it a surprise?
We anticipated some of this was going to happen. Actually, last week I had reported that the CFTC's investigators had concluded that their rules were broken, that the commissioners were, voting on whether to proceed with an enforcement action, which now we see has come to fruition. We also knew that the SEC and SDNY had been investigating as well. So some of this was anticipated. I think the broader message is that enforcement is going to continue. We've seen that signaled from U.S. authorities, but I think this just proves it. And especially, if you were one of those companies last year that collapsed and investors lost a bunch of money, then you can expect that there will be some focus on you.
All right, Allison, thanks very much. Allison Versprill there talking to us about the FTC case against Celsius, the arrest of Alex Mashinsky. And as the FTC deals with Celsius, the chair, Lena Khan, testified on Capitol Hill this morning as lawmakers question her record. Here's what she had to say about the Microsoft Activision ruling from earlier this week.
So I can say again, this was a staff recommendation. I can say it a general matter. Staff always looks closely at an opinion and looks at whether there are certain errors in law that they believe are worth appealing on. Those are in general the types of determinations that go into whether the FTC ends up appealing.
Bloomberg's Kaylee Lyons was on the Hill for the hearing and joins me now. And Kaylee, you know, Lina Khan has a lot going on, from this headline-making $4.7 billion fine that's been suspended and isn't expected to be paid, to the Microsoft Activision ruling. The latter I find more interesting because they're appealing the federal court decision that allowed the acquisition to go through.
Yeah, and she had to face questions surrounding that in her testimony in the House Judicial Committee today. I would note that I asked her the same question in the hallway outside the committee. Why was she appealing? Did she think it would be successful? She didn't answer me, but it's a different position when you're answering lawmakers. While that is going on, obviously, Republicans are talking to her in this hearing about the fact that she seems to have a losing record, questioning whether or not she's pursuing cases intentionally to lose them to get Congress to pass antitrust regulation. In this hearing, she was called a bully. The chairman of this committee, Congressman Jim Jordan, who of course is a Republican, called her leadership a disaster, but it really just kind of speaks to the partisan nature of this. She had much kinder words from Democratic members of this committee than Republicans today. I spoke to several of them outside the hearing room, just get a taste of their words.
I think she's been doing a good job in protecting the American consumer.
She's seems to be pursuing a lot of litigation that is very notably unsuccessful because she's got really strong views about sort of using the law as a social tool.
She's not trying to lose, but I just think she's bringing cases that she thinks are right, and I'm sure they are, and the consumers would benefit from her advocacy.
I think we'd be better served with a clearer process and a better focus and maybe better management.
So, Matt, that's just some Democratic and Republican members of the Judiciary Committee. But once inside the hearing room, of course, they also had questions surrounding ethics, for example, related to her handling of the case brought against Meta, questions of morale among staff at the FTC, too. Just a lot of questions and doubt cast on her leadership of the agency, at least on the Republican side. And, of course, the Republicans are in charge here.
All right, Kaylee, thanks very much. Kaylee Lyons there covering the testimony of Lina Khan, the head of the FTC, on Capitol Hill today. Up next, Betsy Duke, former Fed governor and former Wells Fargo chair, on the state of the banking industry and what the Fed will do next. This is Bloomberg.
Back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip. A bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound. Okay. I think the way they got a date was to impress the females by making loud booms.
have great news today that inflation has been cut by 2/3. So my message is take yes for an answer, Chair Powell, and let's stop with the rate increases. Done.
This is Bloomberg Markets. I'm Matt Miller. That was Senator Elizabeth Warren on Balance of Power last night, talking about what she hopes the Fed will do or stop doing. Also, bank earnings kick off tomorrow as investors await the health of the industry following the collapse of Credit Suisse, SVB, and Signature in March. Now the Fed is getting involved with stricter regulations. Let's discuss all of this with Betsy Duke. She is a former Fed governor as well as former chair of Wells Fargo during the global financial crisis. Betsy, it's a pleasure having you with us. Thanks so much for your time. I'd love to get your view first on the Fed. It seems that this dangerous man, as Elizabeth Warren has called him, has actually done a pretty good job so far. We're not in a recession. We still have unemployment at 3.6%, which is amazingly low, and he's taken inflation in 1 year down from 9.1% to 3%. How do you view it?
Well, if you're going to do a report card on a Fed chairman, I would say Jay Powell's getting pretty good grades right now. Early on, there was a lot of scoffing at the idea that there could potentially be a soft landing, and I still don't think that's a given, but it's looking more likely than it did originally. The one thing I would agree with Senator Warren about, though, is that lower inflation is great news. The problem with it is that when you look at core inflation, you just dip below 5%, and it's hard to declare victory at 5%.
Absolutely. I mean, PPI came in at 0.1% this morning, but if you look at the core, it's 2.4%, which is quite a bit higher. How much further do you think the Fed needs to go? It seems that the market has priced in a pretty clear hike in this meeting, in the July meeting, but the meetings going forward is where the question marks are.
Well, I think the real question is going to end up being what is the real rate of inflation that it's going to take to get inflation not just down, but down below 3%. And real rates have just gotten positive in the last several months. And so that's what it's going to come down to. My guess is it's going to take more than one additional increase. I don't think it's going to get up as high as 6%, but I think 5.5% would be pretty likely. But, you know, all of that will just have to be determined as you see the easy decreases are already in place because you have some components that are now disinflationary, and so they're bringing the totals down. But over time, as the stickier pieces start to come down, some of those will reverse.
A lot of talk about long and variable lags that last, I think, at least according to some economists, 12 to 18 months. And if that's the case, shouldn't we expect the bulk of these rate hikes, you know, this 5.25% that we've gotten so far, to start hitting us in 2024? Do you expect that to decrease or to contract growth? Do you expect that to boost unemployment significantly?
I think the lags are really difficult to measure, and I've never seen any place where those were where somebody come up with a definitive measurement. So I'm more watching what's happening to real rates, and even that's a little bit tricky to estimate. But the long and variable lag or the ultimate effect of bank credit tightening, I think are much tougher to try to suss out.
One of the other things we asked Elizabeth Warren about yesterday was bank consolidation and the state of the industry. Listen to what she had to say to Joe and Kayleigh.
We still have a lot of problems. We have too much concentration in the banking industry. We have more too big to fail banks than we did back when the economy crashed in 2008. And the too big to fail banks are bigger than they were back then. So, you know, we're not out of the woods yet, but I feel a lot better when I read Michael Barr talking about how we need to tighten down on bank regulation. Go, Michael.
So, Betsy, when you listen to her, you get a little bit scared. On the other hand, when I talk to other bank analysts, they say that the industry is in much better shape than it was in 07, 08, 09. How do you view it?
The industry is in much better shape than it was then. And I think the resilience of the industry has showed just in the last 6 months after the failure of 3 good-sized banks. In terms of the size, I don't think it's necessarily the size or the number of banks of a certain size, but you need banks in a full size range, both to provide varieties in the kind and level of service they provide, but also to have acquirers in place so that if a bank does get in trouble, that the FDIC can find a buyer, somebody to take on that business and take over the uninsured depositors, which then reduces the potential for panic.
What do you think about the size of, well, the number of banks, I should say? I think we have well over 4,000 banks in this country. On the one hand, it's great to have regional lenders that understand the community in which they operate. On the other hand, very difficult to regulate, that many institutions. Should we see a consolidation?
Well, remember, I'm a community banker at heart. I was a community banker for most of my career, so I really believe in the importance of community banks. But, there are probably, of that 4,000, there are 3,800, 3,900 of them that are really very small and are serving local communities. And then you have, a variation in size, but you've got probably less than 100 that are of significant size.
What should we expect for earnings season, Betsy, when you look ahead at these big banks getting ready to report and you see, for example, Goldman Sachs trying to guide analysts down? How do you view that?
So the big banks, I think their earnings calls will be interesting for investors in those individual banks. But I think the real story for the industry is going to come out when you get the regionals and the mid-sized banks starting to report. And what I want to see is, what are they looking at in terms of their net interest margin and for the future? What's happening to their funding costs? Looking at what is their level of loans and deposits, and particularly their uninsured deposits. What kind of liquidity coverage do they have on uninsured deposits? And for those, again, in the mid-size of the regional, 100 billion to 700 billion, for those that will be covered under new capital rules significantly, how are they going to look in terms of what's been being proposed or talked about by Michael Barr?
Betsy, excellent to get your insight. Really appreciate talking to you. Former Fed governor and former Wells Fargo chair Betsy Duke talking to us about the banking industry and the economy. Still ahead, Jefferies analyst Sheila Kayagulu on the growing demand for international travel as airfares subside. This is Bloomberg.
Maybe I should go do something else. I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
This is Bloomberg Markets. I'm Matt Miller. As expected, the FTC has asked an appeals court to pause the Microsoft Activision deal, and if the appeals court agrees, that could put the acquisition off. If the appeals court does not, I don't know exactly how long this takes, but I know that the plan was for this deal to be closed over the weekend or early next week. So we'll continue to look for detail on this. As you can see, Microsoft shares are currently up 1% and haven't moved around very much, but of course, it's the Activision piece that sees the volatility, whenever we get these kind of headlines. So we'll continue to monitor this for you. Right now, I want to get to Delta. It saw second quarter profits soar as a rebound in international travel keeps planes packed through the crucial summer season. Jefferies analyst Sheila Kahyaoglu has a buy rating on the airline, and she joins us now to talk about not only Delta, but the industry. Sheila, thanks so much for coming in to the studio. Let's talk specifically about Delta first. I mean, of course, their planes are packed. Everybody is trying to get tickets, which is why prices are high, and these airlines want to buy more vehicles, more airplanes. How are they doing in relation to their competitors in this country?
So we think Delta is well placed, just given their premium offering. Their premium revenues were up 25% year over year versus main cabin that was up 18%. That's why you're seeing the low-cost carriers underperform today, because that number wasn't positive for the sector. Additionally, their international revenues are exploding. So particularly Atlantic was really good for them. I believe up 27% higher yield, so better pricing in the region. Same thing with LATAM. Pacific has a bit of odd year-over-year comps, but obviously that's improving as well. So you want to own the carrier that has a premium offering as well as an international focus that is growing in that business.
Yeah, growth is another thing that you want, and is that possible right now with the supply chain problems that we had, and during the pandemic, the shutdown made it difficult for these companies to get new planes, not to mention the fact that they parked a lot of them and haven't gotten them back out of the desert. So what's that picture look like for Delta?
So the benefit of covering both airlines and aerospace is we get the read on what's going on with the supply chain as well. And one of the reasons we favor Delta is they're only expecting 43 or so aircraft this year, much lower than what Southwest has on the books as well as United. And if they don't get those aircraft, that obviously impacts their capacity going forward. So Delta recalibrated their fleet already. They are expecting some A321s and MAXs in a few years, as well as American. They've modernized their fleet. But we're certainly seeing, when it comes to Boeing and Airbus, supply chain constraints, and they're just not hitting their numbers. And the MAX and the 87 have both had issues over the last 6 months.
Who gets first dibs on the planes that get made?
Whoever pays more, but that's the big bull case on Boeing, in our view, in 2026, 2027, because whatever's being produced right now is being sold at a discount, because recall, the MAX was grounded at the 2019 air show at Paris. Boeing probably gave away a few freebies. So anybody that's getting an aircraft right now, United and Southwest, are probably getting discounted aircraft because they were big orders when Boeing needed it. And after that, it gets better. And actually, slots are becoming more restricted. And if you're putting in a mega order, and that's what we saw at the air show this year about 3 weeks ago, is mega orders, because people want to hold on to those 2028, 2029 slots now.
In terms of costs, what's the picture look like? Fuel has been relatively cheap, right? But labor was a problem. A few months ago. Has that changed at all?
So I think that's what's interesting about the airlines right now. Whenever you see fuel come in, you usually see pricing come down, but that's not happening. So in Q2, we're expecting pricing up about 18% year over year, versus 2019 levels. And for 2023, we're expecting pricing up about 15%. But in 24, we have price flat. So it's really interesting, because 1 point of price for an airline is about 5% of EBITDA. So it's a huge move. So it could be 10% EBITDA market cap move on 1 point of price. So that's what we think is really interesting, is these airlines are going to have pricing opportunity next year. I know that CPI number for airfares was not good yesterday, but Delta's discouraging that correlation, saying it's not necessarily a good way to look at pricing for the airlines. So, and when you think about up 15% versus 2019 levels, not many things are really only 15% above, right?
True.
So I do think airlines will have pricing power, especially given the capacity constraints, and not even mentioning the ATC issues that we're seeing in the market.
Well, and they haven't had pricing power for the past 20 years, or at least as long as I've been paying attention to prices. So this is really a generational shift, isn't it?
Yeah, I think that's what folks are finding interesting about the large network carriers. For the first time in a very long time, they're seeing some pricing power and potential. Their networks are proving to be better positioned. So we'll see if that holds, but I do think only up 15% versus 2019 levels for airfares. There's no other way for somebody to move around the country.
So Delta's your pick among the U.S. carriers. What do you think about the Boeing-Airbus rivalry?
You know, we like Boeing at the moment, but really what we want to play in aerospace and defense is TransDigm and General Electric. We want the services exposure. So TransDigm has about 40% aftermarket exposure. GE is 70% services exposure. And what you're seeing with all these plane delays is services is going to be much higher than 2019 levels. And we think consensus is missing that. And there's potentially 20 points of upside through 2025. So lots of upside on the aftermarket players rather than the OEs, and then the OEs really see an improvement there for the reasons mentioned with Boeing's pricing power after 25.
Awesome.
Cool.
Thank you so much for the wrap. Sheila Kaiulu there, Jefferies analyst covering the aerospace and airlines industries. Coming up, Pepsi CFO Hugh Johnston joins us after boosting guidance for the rest of the year. Can they maintain pricing power? Can they get ahead of inflation? We'll ask Hugh Johnston next. This is Bloomberg.
DHL is sending a consistent message with its investments. The company spent 123 million euros to upgrade its logistics centre at the Cologne Bonn airport, designing it around key strategic goals.
What I love about this building is it actually shows the big mega trends which formed our strategy 2025, which was inaugurated in 2019 when this building opened. So globalization, connecting the world. E-commerce, we have a lot of sortation facilities here for smaller e-commerce shipments. Sustainability, it's a very sustainable building with solar panels on the roof and everything. And digitalization, and well, you can obviously see that it is quite automated.
How did the team pitch this investment to you initially, and how hard was it as a sell for them? How quickly did you turn around and say, yes, this is worth 123 million euros?
Of course, you always have to make sure that you have the right capacity for the growth in the network. And at that time, they came and said, hey, we will really see a strong growth in e-commerce volumes on top of the regular B2B growth. We need more sorting capacity. We need this building. And of course, there are always debates. Does it really have to cost 123 million euros and so on? But fortunately, they convinced us, because then with COVID and the volume surge, we urgently needed the capacity.
In London, in Sydney, from Washington, in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone. Have a great evening. Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
This is Bloomberg.
I'm John Ehrlichman. Welcome to Bloomberg Markets.
And I'm Matt Miller. We got a lot of action in the markets today with the S&P at 4,500. Let's take a look at how it's going right now. Up about 2/3%, hanging just on that round 4,500 number right now. So a continued rally for stocks here in America. We also see a continued rally in bonds with yields falling really across the curve. The 10-year yield down 8 basis points right now at 377.70, and we see the 2-year yield rising even higher. Also, the Bloomberg Dollar Index continues to fall. 5 consecutive days of drops for the greenback, pushing the Bloomberg Dollar Index down to almost 1,200 even, while crude rallies ever higher. Up right now, 43 cents in New York to $76.17 a barrel. We got, John, a PPI number out this morning that boosted, I think, investor sentiment and expands assets from stocks to bonds to commodities. What are you looking at?
Definitely creating a risk-on mood, Matt. And you mentioned oil also trending higher today. In the energy sector, we got to talk about this Exxon deal with Denbury, nearly $5 billion, biggest deal for the company in about 6 years' time as it continues its CO2 pipeline push. Delta also in the headlines today. Stock's been swinging over the course of the session, but the bottom line is they have been very busy. We saw that in the quarterly results and the outlook from the carrier. And then, Matt, you talked about the general risk-on tone today. We have seen that with the NASDAQ. We've seen it with the technology stocks, whether it's an Amazon, which the market generally has received some of those Prime Day stats with an encouraging thumbs up. But then you've got Alphabet, the parent of Google up almost 4.5% at this hour as they continue to roll out features tied to their AI chatbot Bard and roll it out in new markets like Europe and Brazil.
All right, so a lot going on with the giant mega cap tech stocks that start with A. In terms of stocks with D, Disney is another notable name in today's session. Bob Iger had his contract extended another 2 years out in Sun Valley, Idaho at the Allen & Company conference. Here's some of the reaction we heard to that news last night.
I'm thrilled by the news. You know, I know Bob Iger for many years personally. I think he's one of the best CEOs that I've ever seen. So the Disney shareholders should be thrilled.
Bob is, I think, one of the great CEOs of our time. I think he cares a lot about Disney. He's been a great steward. I think he's, the news doesn't surprise me. I think it's part of what you want CEOs to be doing, which is acting like owners and feeling that the important thing is the legacy of the company that they hand on to their successors, to employees, to society, and I think Bob is that guy.
All right, Bloomberg Technologies' Ed Ludlow is in Sun Valley, joins us now live for the first Sun Valley gathering since Succession ended, and now we get to talk, I suppose, about the continued reign of Iger, and maybe we'll keep that Succession story going, too.
Sure. Yeah, I mean, that line, Bob Iger is that man, is so universal here. I mean, everyone that I've spoken to agrees that of all of the challenges that face Disney, he's pretty much the only person that can get a grip on it. When they announced the extension, the board put a lot of emphasis on leadership continuity. But succession is the bigger question. And, you know, in that extended interview with CNBC, Bob Iger was pretty pointed in saying, yes, I feel that people internally can step up to that next level if we're talking about internal candidates as a future CEO of Disney, but they just want more time to allow that process to take place. And I understand from sources that it has been taking place. The board's been thinking about it. They've been reviewing internal candidates, and it's just going to be Bob through December 31st, 2026.
Which, I mean, Ed, I'm not sure if he's going to be able to do anything to change the economics of streaming. Laura Martin tells us that nobody can pay for this. Even a super genius superhero like Bob Iger is going to have a difficulty turning a profit in that business.
So he stated in that interview that Disney Plus will be profitable, which I thought was interesting. I actually spoke to a Disney board member, Mel Lagomasino, about this whole concept. And she makes the point that you have to distinguish those platforms that are making the content and selling it directly to the consumer themselves, a la Netflix. Disney has multi-channels, but it made a big bet on Disney Plus. It still continues to make movies that go out in theaters and it manages some of the releases on the platform. What Iger was candid about is they're going to be spending a lot less on making that content, and they're going to be making less of it in terms of volume, number of shows, number of movies, as a way of moving towards profitability. Very interesting.
Ed, it's also a place where historically everybody wonders if there's deal conversations, and certainly, you know, you think back to Michael Eisner's days at Sun Valley and some of the deal activity that ultimately reshaped Disney. But I think this is a different chapter because it's not just wheeling and dealing in the traditional businesses. You know, I would imagine that this AI conversation is continuing to take hold at Sun Valley.
It is one of the main topics here. Everyone is talking about AI. We have leaders from the AI space here. Reid Hoffman, as part of the conversation that you played, told me that we will see consolidation. You know, historically, 90% of venture-backed companies don't survive. It's a 10% survival rate. They think that the survival rate will be higher in AI because of how transformative the technology is. But there are many startups doing similar things. That's number one. Gina Raimondo is here, the US Commerce Secretary. Sources tell me a big part of what she's meeting technology executives about is AI, which I find very interesting. And then we're all talking about Elon Musk and XAI because we finally learned what he's up to there when they published the details of the team they put together.
All right, Ed, thanks very much. Ed Ludlow covering Sun Valley for us out in Idaho. We'll continue to get to check in with Ed throughout the day on both Bloomberg Television and Bloomberg Radio. Right now, I want to get to that big tech theme that Ed talked about, AI, how it plays a role in our daily lives. Here in New York City, there's a lot to navigate. Themes like AI, as well as cybersecurity and access to broadband, can influence everything from crime to the wealth gap. Matt Frazier leads that charge as the city's chief technology officer, and he joins me now at our headquarters in 731 Lex. Matt, great to have you here on set with us. Thanks so much for your time. I'd love to know how AI is going to change the way we operate in this city. I noticed today that there's a new kind of first of its kind AI bias law put into place to monitor the way people are using this technology to hire. Talk to us about it from your perspective.
Yeah, so Matt, pleasure to be here. When we look at artificial intelligence and what it can do, it means a lot for government services. And if you look at historically how people have applied for services, like think about public health benefits like food stamps or WIC, or you're looking for cash assistance or housing assistance. A lot of those processes were paper-based. You submit an application, and then it goes through a process where someone or a human reviews it. Artificial intelligence can be used to fast-track the review of those types of applications, but also make suggestions in terms of other benefits that you may be entitled to. So it's not only about the faster processing of information, but it's also about bringing information that you wouldn't have otherwise known that you were eligible for up to the surface. And when you look at these things like the laws that are coming out now, it's to make sure that as this technology continuously evolves, that we are controlling the bias to make sure that we're limiting boxing certain people out.
Yeah, I mean, I think we're all excited for the benefits that AI can provide us with. The concern is, and Bloomberg's done a lot of research on this ourselves, some of these large language models have inherent biases built into them. How do you monitor against that kind of thing so that we don't have, these issues when we're, for example, hiring city employees?
Yeah, so that's a great question. So when you look at the big language models that everyone knows now, like ChatGPT, one of the things that makes ChatGPT very different is they created the construct of like a moral compass, whereas if certain information gets submitted, before the model learns it, it flags it so a human can review it to make sure it's good behavior to learn. Now, if you look historically, artificial intelligence, language models, these aren't new things or new constructs. Somewhere around 2014, 2015, Microsoft had launched a very similar model, and it exposed it to social media, and within 12 hours of being live, social media had taught it racial bias. So when you look at the concept of what new language models bring forward and the ability to flag content and have a content monitor, like that's the way that you ensure that it only learns good behavior. But you have to be very careful that you know what you're ingesting and you know what you're learning from.
And Matt, on the subject of identifying bad behavior, it then opens the door to, well, what does the enforcement of that look like? Have you started to think about that part as well?
Yeah, so we've been very conscious about where we've invested and where we choose and where we will lean into from an artificial intelligence perspective. We want to make sure that as we put this technology out, that we have the appropriate safeguards in place, and we want to make sure that when we learn bad behavior, we see that bad behavior, we can block that from being built into the model. And by doing that, as a part of the Office of Tech and Innovation in New York City, we also have a team that focuses exclusively on artificial intelligence, algorithm management, and policy systems that use these types of tech. And with all the safeguards that they put in place and all the things that also New York City Cyber Command is doing to make sure that nefarious actors don't impact these types of technologies, we're taking every active step to make sure that we keep our New Yorkers safe.
I'm glad you brought up the cybersecurity threat. Can you just remind our audience, when it comes to a city like New York, what kind of threats on a daily basis the city is navigating?
Do we have enough time?
Yeah, sure. I mean, to be quite honest, New York City is unlike any other major city that you'll find in the U.S. Our New York City Cyber Command is a team of over 200 resources, and we collect data from over 1 million endpoints. Our weekly average is about 90 billion cyber events, right? 90 billion.
Wow.
And we have a lot of artificial intelligence that we use to distill those 90 billion events down to less than 50 things that people look at to make sure that we get rid of the noise and we deal with the most pressing threats. And like I said, from a national perspective, the closest entity that comes to New York City Cyber Command might be U.S. Army Cyber Command.
Massive. My main question when thinking about tech in New York is access, right? How can you get access to the kind of technology that kids in underserved communities need to learn? How can you get access to technologies that, you know, people in small businesses need and maybe can't necessarily get in order to lift us all up in the end for better results?
Yeah, so it's funny we're here talking about the risk associated with artificial intelligence, and some of the biggest challenges that we have to deal with is about having basic connectivity for New Yorkers. So when the Adams administration took seat last year, one of the things that we looked at was across our public housing community, over 40% of the people that lived in public housing didn't have access to basic broadband. Right? And
unbelievable.
And you think about that in the context
in New York City in 2023.
In 2020, this is 2022.
Okay, but
luckily we fixed it in 2022. So in 2023, we can say that we've largely solved that challenge. But if you go back a year and you look at what we dealt with in 2020 and 2021, where we sent everyone home, and you had the average school-age kid that was doing school from their house, and you think about that in the context where over 40% of the people that lived in public housing didn't have access to broadband, that means you have an entire portion of community that needed access to resources that are arguably inflicted by a number of other challenges that are now suffering from things like learning loss because they didn't have access. So as we look at, you know, connectivity and the digital divide, in New York City, it was a digital chasm. So in 2022, we launched a program called Big Apple Connect, where we went across every public housing development in New York City, and we brought a program that gave them access to free high-speed broadband and basic TV. Now in public housing, we treat broadband like water. When you walk in, you get heat and hot water, God willing. Now you also get broadband as a basic right. So now when you have school-age kids that come home, or you have older New Yorkers that may have mobility challenges, or you have those that need access to digital or telehealth, now they can do all those things from their home without worrying about whether they're going to pay for food or their cable bill.
Excellent. Matt, thanks so much for joining us. Great to have you here at Bloomberg headquarters. Matt Frazier, New York City Chief Technology Officer. Now, coming up, we're going to have a conversation with the CFO of Pepsi, Hugh Johnson, as the company tops second quarter estimates and raises its guidance. This is Bloomberg.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Limes.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue. He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important. This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stenivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Markets. I'm John O'Logan with Matt Miller. And at this hour, we're looking at shares of PepsiCo at a session high. And this comes after the company reported a strong quarter, boosted its sales and profit estimates. Matt, consumers still willing to pay up for brands from Fritos to Gatorade, even with inflation impacting demand these days.
Yeah, it is interesting that they've been able to keep up. I guess great for their shareholders. And if we start to see commodities prices fall, the question is, can Pepsi continue holding on to this pricing power? Let's talk about this right now with the Chief Financial Officer, Hugh Johnson. He joins us right now. Hugh, great to have you on the program after the earnings report. It looks like you're doing a fantastic job of keeping your margins up, even as prices for the underlying commodities rise. If they start to turn around, and we did see PPI drop to almost nothing today, do you think you're going to be able to continue to hold your pricing power?
Hey, good afternoon. Great to be with you guys. Yeah, I'll tell you how we think about it a little bit. And if you think about where we've been year to date, our prices have increased basically exactly the same as our commodity costs have increased as well, essentially right in line with each other. And the gross margin and operating margin improvements that you see are a product of the productivity initiatives that we've launched. So to your question, right now our expectation is that we will continue to see commodity inflation just at a lower level relative to what it's been in the recent past. So we've been in double digits for a while. Our expectation is that number will come down, but still inflationary, and we'll price with that inflation as that inflation becomes more apparent to us. One thing to note on that as well is we tend to forward buy on commodities by about 9 months. So whatever is happening in the marketplace right now takes about 9 months to work its way into our financials by virtue of that hedging strategy that we have.
Helpful context on the price decisions, Hugh, for consumers who are feeling stretched, even if they lean into the brands that you've got. Is there a breaking point at a certain point?
Yeah, you know, it's interesting right now. If you look at what's happening with the consumer, there are both headwinds and tailwinds with the consumer. The headwinds are the ones that you all were just talking about. You know, inflation, higher interest rates, obviously are challenging household budgets. At the same time, the job market is very strong right now. Wages are escalating, and people tend to underestimate or underplay that side of things as well. And the gig economy is offering lots of new opportunities for people to earn money. So when you net all of that out, I think what you see right now is a consumer that's doing okay. They're just cautious. And where they're cautious in particular is big ticket purchases like personal technology, like automobiles. But they're employed. Wages are going up. They have money in their pockets, and we're kind of the affordable treat or the affordable luxury that you tend to spend money on anyway. You fill up the car with gas. You go in. You might buy a Pepsi or a Mountain Dew and a bag of Lay's or a bag of Sun Chips. So there's a reason that companies like ours are defensive stocks, and it's actually playing out fairly well for us. The other thing that's actually playing to the other thing playing to our benefit is, as consumers are getting out more, whether it's vacations or restaurants or back to the office, we tend to be present in those places more than most of our competitors, and that's a real tailwind for us.
Helpful context there. Okay, Hugh, those are the momentum parts of this story. The industry has been preparing